A very good evening to all of y'all. I welcome y'all to our SMCF marathon. Now, in this marathon, we will be covering all the amendments as well. Okay, and I will be taking y'all through the flow also. Okay, before I start, request y'all to share it with your friends. Okay, and also like the video. Now, let's see what is the plan for today. Okay, so first, remember one thing, just a small little strategy to clear this paper. Maybe I'll just take 1 minute. Your strategic management is 40 marks. From here, you should prepare the strategic management. There are no sums, there is absolutely nothing out here, in a way that your life depends on it. Okay, from here, you should definitely get 30 marks. Okay, no matter what, 25 is minimum, 30 is an average that you should aim for it, and after that you're sure to clear. Okay, so prepare it extremely well and look at the past exam questions also for it. Now when we come to your corporate finance, okay, when we come to your corporate finance, now let me tell you the strategy for corporate finance also. First thing is your lesson number 7 is actually you can do it last, and you will see that it covers all the other chapters also. So this lesson number 7, even if you skip it, you will see that you still know all the provision, because they have just taken from all the other chapters, they have copy pasted here. Then next, when we come here, this is nothing but your ICDR regulations 2018, something that you've already done in executive. It is a revision which you just need to go through. Okay, so what is your IPO, FPO with respect to getting listed? Now what starts for you, okay, from the professional point of view is from here. Okay, so 7th chapter, this is your 60 marks. Okay, so this is something that you should not do, at least not in the beginning. After all the chapters are done, you will realize that this is just a small portions of all the chapters that they add in here. So this is your ICDR. I expect already you all must be having a knowledge in executive, so this is just a revision. You all can study from the dream batch. I will be starting personally from your real estate investment trust. I will start with your InvITs. I will go for your private funding. Okay, and here there is one chapter which is called as the International Financial Service Center. So there is a amendment here, and I'll tell you what the amendment is. So we will first start with this, because this is the biggest amendment. This is the biggest amendment. The entire regulation has only been repealed. So 2021 regulation, so there was the International Financial Service Center regulations 2021. This is repealed, and now we have a 2024 regulation. So sir, the entire regulation, yes, the entire regulation has been replaced. Sir, I'm getting very scared. So you don't have to worry. It is almost the same as the previous regulations. I'll tell you what are the key changes, so that you can study from your module only. From your existing, you must have studied. You can continue studying that and move forward. I'll be taking you through the entire. I'll be doing first your IFSC, the entire chapter. Okay. Then I will do REITs. Then I'll do InvITs. Then I'll do private funding, and then we'll look at another important chapter like your instruments. Okay, so the amendments are here only, and when I do the chapter, I'll cover the amendments also, and the amendment sheet I'll share in the group. So with in REITs, there is SME REITs that they have bought in. Okay, so this is one amendment. This is your second key amendment, and your third key amendment is one new instrument has been added. That's all. These are the 3 key changes, and your main amendments are done. So I will be going in that order. First I'll be doing IFSC, then I'll be doing REITs, where I'll cover your small and SME REITs also, and then as we come, I'll also cover the instruments. Okay, so the entire key amendment sheets I will be sharing in the WhatsApp group. With this, we will start with the first chapter. Clear till here, everyone? Now before I start, I want you to remember one thing, that you don't have to worry. Even if you have, obviously last moment they give all these things, you get scared. This entire chapter I'm doing it right now. Be with me. Even if you have zero knowledge about this chapter, you will be able to do it with me. Remember, if you have made your previous notes, you have studied from the module, stick to it. You don't have to do something brand new. It's more or less the same. Only some limits and some changes are there, which I will tell you. Rest, everything line by line is same. Okay. So 2021 regulation, 2024 is more or less the same. Okay. So good to go. Can we start? We will start and complete the entire chapter. Okay. So everyone's with me, yes or no? Can I have, first, can you all like the video, and can I have in the comment section, are you all ready? The entire chapter I will complete it for you. You can do it from your module. From your module you do it only when you will see that this changes there. Some threshold limits have changed, that you can change it from your module only. Clear everyone? In the chat box. Good to go. Gautami, what about others? Show me some energy. I will complete this beautifully with you. I have gone through the entire regulation. I have gone through this entire regulation word by word. I have gone through I have made the entire notes. I will share these notes also with you. All you have to do is sit with me for some time, and in a fast-paced manner I will cover this chapter. Then I'll go to REITs, InVEETs. Then I will go, this is my flow. Then I'll go to private funding. Then I will go to this instruments, etc. GTG. Okay. Thank you so much. Please like the video also. Okay. Bhargavi. Right. Chalo. Let's start. Okay. Hi. So we'll be starting with your chapter called as International Financial Service Center. Now, there was an amendment where the regulations, which was 2021 regulation, that was your International Financial Service Center Authority listing regulations, 2021 was repealed, and now we have the 2024 regulations. Sir, what are these regulations about? Now, your International Financial Service Center is an area. I'll tell you the the entire details also. When a company wants to get listed there, like how we have LODR, we follow here. In IFSC, if any company wants to get listed, then they will have to comply with the IFSCA listing regulation. So this is nothing but a listing regulation. So they will cover provisions such as what is the listing requirement, how I can do an FPO, how I can do an IPO, how I can issue preferential issue, how you do ICDR. This is similar to a combination of ICDR and LODR. Okay, and specifically for international financial service centers. Okay, so let's begin with the concept of IFSC. Now, first thing is, sir, we've understood that we are doing listing requirements in IFSC, but please tell me, what is an International Financial Service Center? So, a International Financial Service Center is a Section 8 company. It's a Section 8 company. It's a SEZ. It is first a SEZ, Special Economic Zone. So, Government of India issues a particular area and say that this is a Special Economic Zone. It will be deemed to be a foreign territory and there will be a lot of tax benefits in that area. Now, in India, there is one very famous operating IFSC, which is nothing but your GIFT city. Okay, which is your GIFT city, Gujarat International Financial Center. It is your GIFT city in Gandhinagar. This entire concept came because there were IFSCs in multiple countries like New York IFSC, London IFSC, Singapore IFSC. These were all, these centers used to be there and attract a lot of global audience. So what is a IFSC? Let's see in short. So IFSC is a designated area in a country which caters mainly to international people, international clients, international. So basically in India, we have, let's say Gujarat is here. Okay, Gujarat. Now from Gujarat, we say that this will be a IFSC. IFSC. Now in IFSC, it will cater cater to people all over the globe. So maybe a Singapore company and all the people. So it becomes a financial hub. So if you see, it's a financial service center. So it becomes a financial hub in the world, where all over the world, countries all over the world can come, get listed, do business, and cater to all over the world. So how is it different from getting listed anywhere in India? So in India, you have your SEBI laws, you have all the other laws. Here, none of the laws, not a single law of India applies in IFSC. There are completely new rules, completely new listing requirements, completely new authority regulating IFSC, and their main job is to make India a financial hub and attract all the foreign companies in the, like how you have Google, they have committed that they will set up an IFSC, etc. So it is an international. So IFSC is a financial hub within a country. So within a country, it is a financial hub. It is mostly a SEZ, as I told you, SEZ, because government will say it's a completely different territory. For the purpose of tax, it is a foreign territory. Okay, and they offer financial services like banking, stock exchange is also financial services, insurance is a financial services, all the financial services that you can think of, wealth management. Okay, all of that will be given to international clients. Okay, they obviously will, it's a SEZ, so it will have tax benefits also. And then the government plans to make it completely international. Okay, completely international means what? It will have all the international features. Okay, like it will have the infrastructure will be on international lines. Okay, etc. It will have a proper social space, commercial space, etc. Now this entire concept of getting IFSC, okay, was by Percy Mistry, was the former chairman of the high-powered expert committee of SEBI, and he was also director at World Bank, played a pivotal role in shaping India's IFSC. Okay, he is also a chairman of Oxford Financial Center. So what all financial services are given in IFSC? So if you go to the IFSC website, right now the main operating IFSC is in Gujarat. It's set up there, and all over and it's completely different. You will see the infrastructure, the services are completely international, at international level. The banks will be set up all over the world. There is capital markets there. They have their own stock exchange, asset management, etc., insurance management, etc. So all over the world, countries all over the world can get listed here. Even we Indian companies can also get listed on a IFSC to tap the international broader audience. We'll see. Okay, now there are already stock exchanges in IFSC. Okay, so your NSE has already set up a subsidiary, NSE IFSC there. There is also India International Exchange, and third, there is also a bullion exchange. Bullion is about gold. Okay, so there are 3 stock exchanges operating, and when you go to see in India, the timing of stock exchange is from 9:30 to, let's say, 3:30. Okay, this is the approximate timing when, or 9 o'clock to 3:30, the India trading starts. But in IFSC, these stock exchanges operate not as per India time, but they are open for 22 hours. So they can cater to almost all the time zone of every single country. So what happens, any company like Google can say that let's get listed on Indian IFSC, International Financial Service Center, because they have a lot of flexibility, less regulation, international regulation, good taxation, and then they will cater to all over the people, all over investors and clients and customers all over the world. Okay, so pretty simple concept. Now in your IFSC, it's completely different. You have a separate act and you have a separate regulator also. That regulator is called as International Financial Service Center Authority, IFSCA authority. Okay, all the powers of SEBI. So four domestic regulators are there. RBI, SEBI, IRDA, and a pension fund. All these are related with financial and stock markets. All the powers of all these four will be done by IFSCA. So this authority has the power of all. So RBI laws don't apply there, FEMA laws don't apply there, insurance laws don't apply there. Okay, all these rules will be given by IFSCA. Okay, so all these four authorities powers have been given to whom? IFSCA. So if I ask you today if a company wants to get listed on Indian stock market, which law they have to comply for listing? So you will say, sir, it is your SEBI LODR regulations, right? Regulations 2015. But now if I tell you, if a company wants to get listed in IFSCA, which laws will be complied? So they want to get listed on a stock exchange in IFSC, then they will comply with the IFSCA authority listing regulations 2024. Very simple. Okay, so it's a listing regulation for a company who wants to get listed in IFSC. Sir, understood. So let's understand the background, when it came into force, when it had an effect, etc. Okay, so first thing is, all the laws of SEBI, RBI, etc. is exercised by whom? It is exercised by International Financial Service Center listing regulations 2024. Okay, now it is a unified, and it's a very, very simple regulation, because what they have done, they have unified issuance of various securities and financial products. Same procedure for any financial product. Sir, I didn't understand. What did he say? That if any company in India or from foreign wants to get listed in IFSC, they will comply with these listing regulations 2024. And this listing regulation is a unified regulatory framework for any kind of issuance, of security. So it's not like for equity shares have to follow different law, for debentures have to follow different law, for maybe any kind new startup thing is there, have to follow another law. So multiple regulations are not there. There is only one listing regulation for all types of issues. Understood, sir? So that means you are saying that there is one unified regulation which covers all the issuance and listing of any securities in IFSC. Specifically because this is the most running and the most operative IFSC in India, that is the GIFT City, and that is why you see this regulation also is from where? Gandhinagar, because IFSC is in Gandhinagar only. So if you see, this is also in Gandhinagar. Okay, now this particular regulation, it replaced the earlier IFSCA regulation which spoke about issuance of securities and getting it listed 2021, and because it brought in all kinds of issuances, any kind of issuance, whether it be debt, equity, etc. And only imagine one method. Even when we do ICDR, I'll tell you preference shares are different format, sir, bonus shares different format, sir, IPO different format, different procedure, for FPO different procedure. So this is just one procedure, so easy for any kind of security. Okay, so they have consolidated all the listing related provision into one single harmonized code, reducing the compliance level. Imagine this should be there in India for everything, that only one procedure irrespective of which security you are issuing. Okay, this is there because this is an international best practice. Why it is done? It was aligning, this entire regulation is in alignment with the international best practices. Okay, now we come very simple. Now pay attention, what are we doing? I'm taking you through not only the regulation but each regulation wise. Okay, so first one, the short title is, this is called as the IFSC regulation 2024. Sir, what is the objective of this? See your regulation number 2. So you can write at least this, you can write regulation number 2, you can always write in the exam. Okay, that it gives you the objective of this regulation. So if you go to see, what did I tell you? That they wanted to make a unified framework. They wanted to make a unified regulatory framework for listing, okay, for listing of securities, whether it be debt, whether it be depository receipts or any other financial product on the stock exchange in IFSC centers. Okay, so what is it? It's a regulatory framework for listing of securities, any securities in the IFSC. Sir, beautifully understood. Let's move ahead. Okay, and sir, what kind of issuance I can do? So my question to you is, what kind you can think of? Sir, I can think of equity shares. This regulation applies to it. Anything this is for issuance and listing of any financial instrument in IFSC. Sir, equity shares. What other instrument do you know? So debentures, that is also covered. Sir, ESG debt securities. This is a new kind of which will come in later part of the chapter. ESG debt securities, ESG debt. So this is basically debentures issued. You've taken money like a debt fund. You've issued bonds for purpose of environment, social, governance, all those things also you take, but it's a debt security, na? So any kind. What else you can think of? Sir, I have heard of REITs. That is also covered here. Sir, I have heard of commercial paper. That is also covered. Sir, certificate of deposit. That is also covered. Sir, SPAC, your special purpose acquisition company. It's a beautiful concept that will come. That is also covered. It will come. What is the concept? Depository receipts, sir, IDR we had done, your GDR, that is also covered. Okay, and any other financial product. So it's a very wide regulation covering any issuance of any financial product will be regulated under the IFSCA regulations 2024. Sir, beautifully understood. Okay, sir, now one more question I want to ask. Does it apply? Does it apply for IPO? Okay, does it apply for IPO or FPO? Everything. IPO, FPO, whatever you can think of. Right issue, preferential issue, everything is covered here in these regulations only. Okay, done. Second, sir, what about secondary listing? Secondary listing. Okay, so they also govern secondary listing. All these topics will come later, but let me tell you, secondary listing means what? You are already listed in one country and you want to get listed in IFSC also. So for example, Tata's is already listed in India. It wants to get listed in IFSC also, so it can get listed, which is a second listing. So secondary listing is a secondary listing, or sometimes people call it as a dual listing. Means you are listed in your home country, you are listed on any other stock exchange and want to get listed on IFSC also. So that some provisions have been given, which is also very simple. Okay, then QIP, anyone whoever wants to get QIP placement, this all we have seen in ICDR. All these types, everything with respect to issuance and listing of financial products in IFSC is covered under the IFSCA listing regulations 2024. So beautifully understood. Let's get into the topic. Okay, now one more thing is, this entire act, this entire regulation, okay, applies to companies incorporated in IFSC, incorporated in India, or incorporated in a foreign jurisdiction. What does it mean? Very simple. It means very simple that, let's say if this is, again, I'm just coming to Gujarat GIFT City only. This is a IFSC. Who can get listed in IFSC? So can a Indian company get listed in IFSC? Answer is yes. So it applies to companies which is incorporated in India. Means even an Indian company can get listed in IFSC. Second, can Google get listed there? So obviously even a company in a foreign jurisdiction can also get listed in that. And third, if a company was incorporated in IFSC and wants to get listed, it applies even to them. So ideally, if you go to see, almost all the areas are covered on the planet. India, out of India, and inside IFSC, all three are covered, na? India, IFSC and global. So any company whichever wants to get listed on the IFSC can get listed, and they will have to comply with these regulations. So all these limits and these when we do the provisions, you will come to know. Okay, let's see, these are some of the highlights. Let's see. So now we will go into the each regulation wise. Very simple. So and this I am doing from the core act, from the core regulation only. Okay, so first we had done the name. The second is the objective, which we will write every time. That's a regulatory provision framework for listing of specified securities, whether it be debt securities, depositories, anything. Okay, third gives you a definition. Now out of the definitions, two definitions are important. I mean, just for and these are very simple. Okay, so two definitions. One is what is a foreign jurisdiction, and second is what is a KMP. Okay, so first is foreign jurisdiction. Now I told you this entire regulation applies to any company which wants to get listed, which is in India or which is in IFSC or which is a foreign jurisdiction. Now foreign jurisdiction means only those jurisdiction, only companies from those jurisdiction which have complied with money laundering laws can come here. So this we've always seen that a company from Pakistan cannot come and get listed, because though it is a foreign territory, but they have said a foreign jurisdiction refers to any country other than India. Obviously foreign means other than India, which meets the following criteria. The securities regulator has signed the ISCO, or they have signed a bilateral treaty with IFSCA, or the country is not listed. So one is positive requirement that you should be either in in a country which is your regulator, your financial regulator has signed with the ISCO MOU, and which is not listed by the Financial Action Task Force as a country which has deficient anti-money laundering laws and which has not made any sufficient progress on any action plan given by IFSC. So foreign jurisdiction means a good country. You can come from America, you can come from any other country, but you cannot come from a country which has not signed the bilateral, and which is, if a country is listed in any of the flagged countries, like which has deficient in money laundering laws or which has not made sufficient progress, they will not be able to get listed in India. Common sense. Now very, very important, the scope of company secretaries have increased, and that is why this regulation becomes, this definition becomes important. Okay, so your KMP, they have said for companies incorporated in India, they will have the same definition as given under section 2 subsection 51, and for companies incorporated out of India, they mean, same thing they've written, but they've always covered company secretary. So the scope of CS has increased. Okay, and we have been covered as a compliance officer under these regulations. Okay, and that is why this chapter becomes important. So we've already done your regulation number 3. Now we are coming to regulation number 3 was the definition. Now we are doing regulation number 4, applicability of the act. Okay, what is the applicability of the act? To who all it applies? I told you it applies to IPO, FPO. Okay, it applies to debt, equity issue, preferential issue, everything. So this is the entire act, a unified framework for all kinds of issues, commercial paper, commercial certificate of deposits, everything. This is the unified guidelines. Okay, so we are done with this applicability. Also this I am going as per regulation wise. Okay, in your IFSCA listing regulation. So pretty simple. Okay, so some of these terms which are there, like your special purpose, IPO by a special purpose acquisition company, the concept will come later. So right now we can move ahead. Okay, now again, sir, if any question comes in IFSCA, what do I write? What if I blank out? So the very simple, your protector is regulation number 5. Okay, regulation number 5 and 6, this is applicable to everyone. Okay, so I will definitely write. Now just think that if a company is getting listed in IFSC, what will the regulator, IFSCA authority tell? So they will have some thresholds. Okay, those thresholds are new, which I'll tell you. Okay, different from the previous 2021 regulation. Rest mostly it is the same. Okay, general condition that the issuer must in the offer document. So now just think from this point of view. This is the this entire thing is your IFSC. Okay, you are getting listed in IFSC. Who's the regulator? Your regulator is your IFSC regulator. Which law will you follow? You will follow the listing regulations 2024. And for what kind of issuance? All kind of issuance. It's a unified framework for all financial products. Okay. So if a company, let's say I'm taking an example. This is a company. One is an Indian company and the other one is a foreign company. It wants to get listed. It wants to get listed in IFSC. So what all conditions it has to follow? So obviously they have to give true, correct and adequate disclosure. Very generic things are being given. Timely information will be given. Okay. Treat all holders fairly. They will work in the best interest of shareholders. Then general eligibility criteria. Okay. So general eligibility criteria, they will have to be incorporated in IFSC or in India or jurisdiction. So obviously you will have to be incorporated at some place. As I told you that a company which wants to get listed in IFSC can be from anywhere. It can be incorporated in IFSC and then get listed, or it could be incorporated anywhere in India and then get listed, or it could be in any foreign jurisdiction and then get listed. Okay. And when we've spoken that any company can get listed, but ineligibility is also been given. So they are ineligible. Who are ineligible, sir? So anyone where the any company is debarred from accessing the capital markets, they are willful defaulters or fugitive economic offenders. Very simple, very similar to ICDR, because ICDR regulation is also as per international thing. So here they are telling you general rules, which is very simple. Offer document, give a timely disclosure of all the financial information, treat everyone equally, work in the best interest of investors, get incorporated someplace. Okay, and then you should not be ineligible. So this is the negative list. So debarred, willful defaulter and fugitive economic offenders are not allowed. So this is general. You can even write the regulation number 5. Why? Because that will help you write in almost all the answers. We saw this eligibility criteria also. Now we'll see the other points. Okay, now we are still in the general criteria only. This again you can write everywhere. These 2 points. That all the obviously are getting listed. So before getting listed, the securities listed or proposed to be listed shall be in dematerialized form and freely transferable. Debt securities may also be held with an international center securities depository. Means even debt instruments have to be in dematerialized form. Remember this point. And currency. So they could be listed and traded in any foreign currency, any specified foreign currency. So government, RBI or IFSC will tell you which are the specified currencies in which trading can go on. So coming back, what are the general conditions, sir? So firstly, the general conditions are true and fair view, best interest, okay, get listed at some point, do not be debarred. Okay, then if you go to see everything in dematerialized form and everything in a specified, just highlight the word specified foreign currency. Specified means specified by IFSC. Done. We are done with the first and the general part. Now we go to the next thing. Sir, what about IPO and FPO? Before we get into IPO, FPO, tell me one thing. The general points we can always build, and I've told you it's a 5, 6, 7, 8. All these which I have is in order of the regulation number. Okay. Now we talk about IPO. Now let's get about IPO. So in IPO, what is happening? A company maybe from India, maybe from foreign, okay, or maybe incorporated in IFSC, wants to come out and get listed on any stock exchange and raise money from public. So I want to ask you, before we do the IPO provisions, you have done ICDR. Okay. I want to know from you what all general points are there in your, in IPO, what all comes in. So companies raising from public. So first thing is there will be a offer document. There will be a offer document. This has to be approved. It should have all the true and fair view. I'm just thinking. Okay. Second, in the offer document, they will say minimum subscription. Minimum subscription should be there. Normally, when we say it is 90%, right? Normally, minimum subscription in ICDR and always what we've learned is 90%. Here it is 75%. Minimum subscription is how much? 75%. If it 75% is not met, then you have to refund the entire money, which we will see when we do the figures. Third, I'm just thinking, when company coming out with an IPO, they do underwriting. So underwriting, so all the same points will only be written. There's nothing this. And one very, very important thing, they give you some thresholds. They give you some thresholds. So what are these thresholds? Market is important. Okay, these thresholds were different in 2021. They have revised these thresholds, okay, in 2024 regulation, which we will do and see. Okay, I'm just thinking what else can be there in IPO. We will see. So first thing is the figures, the eligibility criteria. This is for what, sir? This is for IPO. So if a company wants to come out with IPO, it has losses. Can it come? Answer is no. What is the revise? This is the revise thresholds. Market is important. Revise thresholds. Okay. This is important for IPO. So a issuer must satisfy any one of the following conditions. Any one. Operating revenue of 20 million in the last or the average 3 years. Last or average 3 years. Pre-tax profit of $1 million. Post-issue market capitalization of $25 million. Or any other criteria as may be specified. So, sir, what is it? 4 thresholds have been given. This criteria is for IPO. Okay, and the thresholds. Let's see. First is operating revenue. How much is the operating revenue? 20 million last or average. Pre-tax profit 1 million last or average, 3 years average. Post-issue market capitalization 25 million minimum is needed, and any other criteria as may be specified by IFSC. So this you can mark as important. Okay. So 20 million, 1 million, 25 million. 20 million is revenue. Okay. This is profit. 1 million is profit, and 25 is your market capitalization post listing. Okay. Clear till here? So these are the thresholds which you will have to learn. Now, offer for sale. Mark this also as important. Offer for sale. This is also there in normal ICDR. You do this is the same standard. What is offer for sale? So offer for sale is basically whenever IPO is coming, pre-issue investors can knock off their shares and exit. So for example, if a company ABC is proposed to getting listed, they already have some shareholders. Their shareholders will sell their shares to public and leave. In Paytm, there were some pre-issue investors. They said that to public we are selling new shares, and our existing people who had held the share for at least 1 year, they are also knocking and leaving. So offer for sale is anyone who was holding must be held at least for 1 year by the seller, unless it is acquired by held for 1 year or issued through bonus shares for held for 1 year. So anyone who wants to offer their shares to public during the IPO can sell it. For example, I am holding these shares for 3 years. Now when an IPO is coming, I want to sell my shares and leave. So I am an offer for sale, but at least 1 year it should be done. Now if a merger was done, the time period of merger or the time period will be considered. If I had issued bonus shares, just issued, the time period on which I got the this will be seen. Okay, the ownership of the shares will be seen, that whether it is through a transition through a M&A, that time period will be seen. For example, in M&A, if I explain, that a company was there, company A and company B. You were holding the shares for 3 years. Now a new company AB is formed. Okay, so here the time period of you holding the shares in the transferor company will be computed, will be counted. Very simple. Now one very important thing we forgotten is, when we do this, offer document is there, is merchant banker, right? So we call them as lead managers. So they will ensure that a proper process is done. In that they will also ensure this guy who comes in, the merchant banker, will give a DDC, due diligence certificate. What he will give? He will give a due diligence certificate to the IFSCA that all the rules have been complied with. Clear? Yes. Okay. Lead manager shall appoint a lead manager in principle approval. Now obviously if you are getting listed on any stock exchange, it's your duty to get a in principle approval from the stock exchange that listen, I am coming out with an IPO and I'll get listed later. So these are give me at least a green signal so I can get the other approvals. So it's an in principle approval will have to be got. Okay. Then comes filing of offer document. Now pay attention to this. This is again a new thing which they've given you. Filing of offer document. Now they will look at the issue size. If they're breaking down the compliance from the issue size basis. If the issue size is 50 million or up to $50 million, or it is greater than 50 million USD. So we are going to see the issue size. So let's say Google is coming in to get listed. Now they will obviously come with a criteria of greater than 50 million. And let's say a new company from India is going in. They want to go, they might come up to 50 million. So the compliance level will differ. So what is the compliance level? I have beautifully summarized it here. Okay, beautifully summarized it here. That if the issue size is up to 50 million, then the filing requirement is obviously you'll file the draft offer document. You have to get a DDC from the merchant banker. Okay, and you have to put it on the website. Simple, done. Sir, so simple, yes. I told you these regulations are international standards, so internationally laws are very simple, very simplified. Offer document, DDC and website. What else do you need? But now if it is exceeding, so then they just put in one more criteria that the offer document should be kept in the public domain for 7 working days to invite public comments. That's it, and they will review and then approve it. Same process, but only one additional criteria gets added, that the draft offer document will be put in the public domain to invite public comments. So we are going regulation wise. We saw the eligibility criteria. Okay, this was given. Okay, so eligibility criteria we saw 1 million, 20 million pre-tax, all this, and 25 million market cap. Beautifully. Okay. Then we saw offer for sale. How many who can opt, who can participate in offer for sale during IPO, who can offer their shares for sale, who are holding it for how much time period? At least 1 year prior to the filing of the draft offer document. This is very similar to ICDR. Then I have a lead manager, then I have in principle approval, file a offer document. I told you 50 million more. This we are doing the regulation. Okay, so regulation wise I'm doing. See, filing of offer document 50 million. See this regulation number 2014. Okay. Now we come to the other things. Offer timing. So offer timing, offer must be launched within 12 months from the date of receiving observation or filing under. So moment you have done the filing and it has been approved, within 12 months you come out with the offer. So offer must be made. So make offer within 12 months from the time you get an observation for your draft letter of offer. Common sense. This is also very similar to your ICDR. Okay. Now disclosure shall be given. Okay, disclosure shall be given. True, correct and adequate disclosures will be given. Now as we do reservations in your ICDR, when a company, here also they can do an reservation. So reservation can be done for employees. directors or shareholders. So it is up to the company. The issuer may reserve some part, that from the public this much is for employees, this is for the directors, and this will be the special pricing for them. Now sir, how will they price the securities? Pricing of securities. So again, it could be through a fixed price method or book building method. So it is so simple. Yes, it is super simple. Okay, you can do it. See, an offer disclosures will be given. Then I told you pricing. So they are fixed as per fixed pricing or book building method. Okay. Then comes offer period. It will be, what is the offer period? IPO must remain open for at least 1 working day and not more than 10 working days. So it will be, offer period will be minimum 1 to 10 working days. Okay, minimum 1 to 10 working days. So this is about when they are coming out with an IPO, and these are the entire rules that we can write, and very similar if you can to ICDR. Minimum public offer. How much minimum public offering should be done? If it is an Indian company, they will follow with the SCRR rules. If it is a foreign company, then at least 10% of the issued capital must be publicly traded. So if I ask you, what is the minimum public shareholding that a listed company in India should have? You'll say 25%. Okay. For foreign company, it is given 10%. Okay. Minimum public shareholding is 10%. Rest all can be held by the promoter group. Minimum subscription. Okay. So obviously you should receive the minimum subscription only. Then you can do, even anchor in anchor investor portion can be kept. Underwriters could be there. One very, very important point, okay, is monitoring agency. That the issuer may appoint a credit rating agency is registered with IFSC as a monitoring agency to oversee the utilization of the issue, and this report shall be prepared and published on quarterly basis. See, if you remember, even in a ICDR, a monitoring agency has to be appointed if it hits a certain thresholds. So here they are saying that the issuer may appoint a credit rating agency, CRA, to act as a monitoring agency to oversee the utilization of the issue proceeds. Allotment should be completed within 5 working days. Listing, specified securities must be listed within the time. Okay, company may offer green shoe option if they want. Responsibilities of the lead manager, he shall prepare and disclose activity wise responsibility matrix, handle all the pre and post issues. This is same as what this one does, and no person may receive incentives for making an application, okay, other than the legitimate fees. You cannot give gifts, etc., for making applications in the public issue. So we saw all these points are there, and this is very simple. So we saw the entire thing: offer period, minimum offer, minimum subscription, okay, anchor investor, underwriter, monitoring agency, allotment. This we are going from the regulation wise. Each regulation we are doing. Okay. Now we are seeing the next one is FPO. So IPO we are done. In IPO, what all points were there? Just looking at thinking about the points. So there was about lead merchant banker, about don't give any incentives. Then green shoe option can be given. Then offer opening date, allotment should be given within 5 working days of. So this we can mark as important. 5 working days from the closure. Okay. Monitoring agency may be appointed. Underwriting should be done. Anchor investor, issuer may allocate for anchor investor, employee, directors, all those were there. Okay. Minimum subscription should be received. What is the minimum public offer? Minimum public subscription that has been given. Offer period. Pricing, you can do it as you wish. Book building or fixed price method. Now we come to FPO. Now we come to a follow on public offer. Sir, follow on public offer and IPO will be same. You have done ICDR regulations. IPO comes in and all exact copy paste is of FPO. Yes or no? About merchant banker, about opening of the issue, about having a prospectus, etc. In FPO, they will have some few key differences which we will highlight. Okay, let's see. So what is an FPO? FPO is a listed company. A listed company makes a further issue. Okay. Now same points will be given. A listed company may make a further issue also. Offer for sale, again, anyone who was holding it for at least 1 year can participate. Lead merchant banker should be appointed. Your in principle approval should be taken. And fast track FPO. Sir, what is a fast track FPO? So this in mark as important and also very simple. Your regulation number 36. Okay. So we are seeing your regulation number 36. Fast track follow on public offer. Let's understand. First thing, what is a fast track FPO? If you remember, even in your ICDR regulation, there is a fast track FPO there, where it says that certain companies which have been listed for some time and have no pending inquiry, no auditor qualification, they have redressed the customer grievances, can immediately file and come out with an FPO. They don't have to get the scrutiny from the IFSC prospectus every time. Okay, so this is like a shelf prospectus or a fast track FPO. Is fast track FPO, first of all, is coming in follow on public offer only. In IPO you can't come as a fast track. Why? Because the first condition is that the share should be listed for at least 18 months. Okay, and they should have complied with all the regulatory requirement for 3 years. So if, see, again, you have to be listed, right? Only then you are allowed to come out with a fast track. They may raise capital without undergoing a detailed scrutiny from IFSC, provided they have to meet some thresholds. So what are the thresholds? Mark as important. First thing, they have to be listed for 18 months. They should be in compliance with all the regulatory requirements for 3 years. Okay, so you have to be listed and you have to follow the regulatory requirements. So even if before listing you were unlisted company, so that time also you have to see from the past 3 years there should not be any regulatory non-compliance. What if I was incorporated less than 3 years? Then only that much time period will be seen. For example, if a company was incorporated 2 years and then listed for 18 months from that, so only that much time period we will see for how much ever time you were in existence. And obviously they have been a good compliant company. So they have no pending show cause notice, audit qualification or disclosure of any irregularities. Okay. And it must be hosted on the website of the stock exchange as well. Non-fast track IPO. Obviously companies which are not eligible will come here. So issuers not eligible for fast track may have to go through the filing of the draft offer document and the entire process as given in IPO. So what did they say? That a company which is not eligible for fast track, then they will have to follow same process as that of IPO. Same process as that of IPO. So we saw listing, your lead manager has to be appointed, draft offer, your opening date, your closing date, all those things will be there. Okay. Disclosure in offer documents. The FPO offer documents must include all the what all disclosures will be there in offer document. Obviously any kind of non-compliance, securities, reasons for issuer, and obviously a bold disclaimer should be there that IFSC has not verified or approved or promoting any contents or the company. It is subject to market risk. You will have to follow everything. Okay. Material disclosures, issuers material policy, details as the capital structure, financial structure, etc. shall be given. Okay. And then they go on to say that the issue process, what will be the issue process? So all the provisions applicable to IPO shall apply mutatis mutandis to FPOs also. So copy paste procedure. Okay. Only if you are in fast track, you have a shortcut. Rest everything you have to comply as of FPO. Okay. Listing without public offer. They haven't given much, that even a company may list itself without a public offer subject to the conditions as may be specified. So as in India also, we have certain stock exchanges where you can get listed without coming with IPO. Okay, without, so you can basically for your innovators growth platform, if you know what it is, in ICDR you should do, then you know. So that they are saying condition will be specified that you get listed, but you cannot tap public, you might tap investors and private placement, that is fine. Conditions will be given. We are concerned with the next one. So we did IPO process, beautifully, very nicely understood. FPO, also we did in FPO, they said that you have to follow the IPO process only. Done. Okay. Now we are doing dual listing. Dual listing is also called as secondary listing. What it is called? Secondary listing. This is given in your chapter 5 of the IFSC authority listing regulations 2024. So let's go to your chapter 5. Okay. We are going to your chapter number 5. Okay. What is the name of the chapter? Can you read and tell me? Listing of specified securities already listed in other jurisdiction. Means secondary listing, not dual listing. I am already listed in some other jurisdiction and I want to get listed in IFSC also. So for example, Google is listed on NYSE, New York Stock Exchange, and Nasdaq Stock Exchange. Google is listed. Now Google wants to get listed in IFSCA in Gujarat. So they will have to follow this regulation number 41. What is 41? Secondary listing, that they want to get. This is the second stock exchange or another stock exchange that they want to get listed. Even an Indian company which is listed on NSE and BSE, already listed company wants to get listed in IFSC, then they'll have to follow the rules of secondary listing. Sir, what are the rules? So first thing is, what do you mean by a secondary listing? So a secondary listing is when a company that is already listed on one stock exchange, okay, wants to get its securities listed on another stock exchange with or without public offer. I told you nowadays companies can get listed. After listing they can tap public, or they will say we will not go to public, we will make private placements only. So then they say, why are you getting listed? So they can say that we are getting listed for visibility, we want only investors, we don't want the general public to come. So very good, you can do it. What problem we have? Okay, so company already listed can also get listed here and they can come out with a public issue, or they can choose not to come out and just be listed also. That is also fine. Now mostly what is there, if it's dual listing, now they will say that you can get listed here, but you can only get listed if you are not non-compliant in your primary listing country. So wherever you are listed already, there you should be a good person, good boy, good student, good company, then only you can come here. That's it. Let's see. If you are secondary listing without public offer, an issuer already listed in another jurisdiction may list in IFSC without a public offer by filing an application and complying with the listing agreement. Done. Listing with public offer. So then you may also be listed with a public offer, and then you have to follow the IPO rules. So they have simplified the entire regulation so much that anywhere they are saying that you comply with the IPO rules, mutais mutandis, means just do the IPO rules and everything gets done. And you see, very interestingly, they have not said for one type of security this rules, for another type of security this rules. Any security, same rules. Beautiful regulation, beautiful concept. Okay. Then comes QIP placement. Now again, what is a QIP placement? A public Indian company listed in India may undertake a QIP in IFSC as per the condition laid down by the authority. Nothing much in detail. They have said that if you want to get listed and issue it to QIB. What is QIB placement? It is basically issuing to qualified institutional buyers. So you can do, condition will be laid down by the authority. So if you go to see 41 we are done, 42 is there, 43. So actually in the main regulation also they have not given anything. Okay. Now we come to the most important part of the chapter. Most important thing, which is your listing of SPAC companies. chapter number 6. So chapter 5 was dual listing. Now we are seeing your chapter number 6, special purpose acquisition company. Beautiful concept and very nice concept also. So what is this company? I'll tell you what happens. Internationally, there are some companies that are formed simply for takeover purpose. That is why it's called as acquisition company. Now, sir, why acquisition and all of this? So obviously, what happens is, if there is, I'm giving you the full history, okay? In short, just pay attention. Understand the scenario under which SPAC has gained its importance. Let's say there is a promoter, okay? Promoter who's like becoming really big. He's from IIM, etc., IIT, and really has a beautiful product, okay, and it has a chance of it wants to tap market quickly. Now what it will say that, listen, when I go, I will have to follow listing agreement, etc. This entire listing process is a compliance, and this compliance might take you 12 months to get listed, to get everything, right? So might as well you would want to acquire a listed company only. So if you don't want to do all this and waste time, what you will do? So a unlisted company which will become the acquirer, and it will acquire a SPAC. SPAC is a listed company. It's a shell company. Having no operating business of own. The main purpose of this is to get acquired, by another. Okay, it will look that it is the acquirer, but in reality it is getting acquired. So pay attention. What is it is saying that? So let me explain. Okay, so let's say the promoters are here. These talented promoters are here. Talent is here. Now they will go and talk to the SPAC. This SPAC is a listed company already, and it is having no operating business, and it has raised funds also. It has raised funds from public, okay, and having no business at all. Okay, let's say they have raised of 100 crores, and it is your. Now these people, the promoters, those who have set up the SPAC, who are very good at setting up and etc. So they will tell that, listen, our company already has 100 crores. We are helping you. You can take us over, or other way around. We will acquire you. Okay. All our existing people will exit out. You all come in and you all run the company. But to exit out all of us, you all have to give 500 crores. So the special purpose acquisition company, they will acquire this company. Now this company will lose its existence, and automatically all its assets will be transferred, and this company will automatically become a listed company. The existing people here will be bought out. They will exit by taking the money, and now these talented people have saved time, paid some extra money and come. Okay, so now let's read. So does a SPAC company, first of all, is it allowed in India to set up a company? Imagine you are a company secretary. I come as a client and I say, just set up a company. It will have no business. In object clause, we will write that we will acquire a company. We will get listed and we will acquire. In India, all this is not allowed. This is allowed in international lines. Internationally, it is allowed, and that is in IFSC this concept is there. So, and you must have heard this concept is there in takeover code, etc., which is called as backdoor listing. What it is called? It is called as backdoor listing, where it is a shortcut to listing. Buy a listed company and you get listed. So a special purpose acquisition company does not have any operating business. It is a coca company, shell company. It is formed with the objective of doing a business combination. They call it as a takeover. It's called as a business combination. They want to combine with someone. What is the process? The process is pretty simple, and they have given a deadline. Company is formed, but within 36 months they have to do the business combination. Otherwise, they will have to liquidate. So process flow of a special purpose acquisition company, a SPAC company is incorporated, raise capital through IPO. So I will want to buy this IPO. I will invest in this company. I'll say that when any company will acquire us, we will get some money. Exit. Okay. If the business acquisition does not occur within 36 months, then the SPAC will get liquidated and the funds will be refunded back to us. So in 36 months, 3 years, mandatory they have to figure out someone and close it. So now we are coming to the chapters. Which chapter I told you? Chapter number 6, eligibility. Who can come? So eligibility is given in your regulation number 44. SPAC may raise through IPO if no target business is identified prior to IPO. So we have not identified which is the target company. We will identify later on. We are just raising the money and then later we will identify who to buy, which private company to buy. The promoters will say now you all stay, now we'll run away. It has provision for redemption and liquidation. So it has that within 36 months if we don't acquire anyone, then we will have to, every money it will get liquidated, all the money will be there. And redemption means repayment. So if I have bought the shares, how my money will be repaid. So if someone is there, they will give me money, I will sell my shares and leave. And the sponsors have a credible record and disclosure level. Okay, now the same thing, who are ineligible as we had done? Debarred, willful defaulter and fugitive economic offenders. Process is exactly the same. Okay, the process is similar to IPO. Appoint a lead manager, get a in principle approval of stock exchange, offer document, offer must open within 12 months, disclosures must be given. Now some of the key thresholds, you can note it down. Key thresholds, all that you can write. Minimum issue size, that the minimum issue size must be $50 million. The sponsor should hold at least 15% and not more than 20% of the post issued capital. Minimum pre-IPO subscription, okay, $10 million or 25% of the issue size. So if you go to see, so who are not eligible, we saw IPO process, we saw same, timing also we saw 12 months, right? Disclosures will be given, issue size is there, the sponsor shall hold 15 to 20% of the post issued capital, and prior to the IPO, the sponsor shall have an aggregate subscription in the SPAC amounting to $10 million, equivalent to 2.5% of the issue price, whichever is lower. So the sponsor subscription before the IPO should be $10 million or 2.5% of the issue size, whichever is lower. Okay, you don't have to learn all this. We can write how much ever you want. Okay. Fixed price mechanism for pricing. Offer period will be 1 to 10 days as normal. Underwriting is also allowed. Okay. Application and allotment. So application size will be 1 lakh. This you can remember. Application size will be $1 lakh. So anyone investing will have to invest at least $1 lakh. Okay, allotment could be discretionary or proportionate. So the issuer will decide in case of oversubscription how they want to do it. Okay, allotment, payments, refund shall be completed within 5 working days, just like IPO. Other provisions will be same like IPO. This is the most beautiful thing I found. Anything happens, everything as the IPO. Now again, some points. So from here, what all we saw, that minimum issue size will be 50 million. Sponsor holding, sponsor pre-subscription holding has been given. Offer period has been given. Underwriter is allowed 50% of commission is deferred until the business combination. So if I have to pay underwriting commission also, I can't give all at once. I have to give once now, once after the business combination. If the business combination doesn't go through, you will not give. Okay. Then SPAC specific obligations. Now escrow account required for IPO proceeds to be invested in liquid instruments. Now we understand this. Very, very important. Okay, liquid instruments. Now imagine we have raised the money. We have raised money from IPO. Why we have raised? To do acquisition, or I'll call it for to do business combination. To do business combination, right? So we have done to do business combination. Now till we do business combination, money will be kept in liquid instrument. So maybe I can keep it in scheduled bank, or I can keep it in any you could say your mutual funds, etc., which is liquid. Okay, funds in escrow account can be used only for taxation and working capital purposes. Obviously the main purpose is to do a business combination within 36 months. If 36 is not done, then you will have to refund, okay, and shut down the entire company. Combination must be at least 80% of the escrow value, excluding the deferred commission. Now pay attention that the combination, like we have to do a business combination, must be at least 80% of the escrow value. So for example, if I have raised 100 crores, giving an example, I have raised 100 crores. So business combination, I have to do a takeover and pay how much to buy the company? At least 80 crores. At least 80% of the escrow amount, because that is the main purpose of the business, should be used for purchasing. No related party transactions in business combinations are allowed. Warrants can be issued in SPAC. So when you know what is a warrant, so when I'm selling a instrument, along with that I can attach a warrant also. A warrant gives you that in future if you want at this price you can buy, you have to pay some money. It's like a call option. You want, you buy, you don't buy. So I sell, my main instrument is there. With that I give you a call option. Which is like a warrant. This warrant, if you want, this is a right to buy some shares at a predetermined price. So imagine I am coming out with an IPO. In IPO I am selling my equity shares for this much amount. With the equity shares, I can say that you all can also pay some extra little bit amount and you can buy a warrant. The warrant will give you a right to buy at a certain price. So you have to pay that extra to get that right. It may or may not be successful. It may or may not be helpful. Now, if you want, you can transfer that to someone else and sell it in the market. It is transferable also. So one equity share will have not more than one warrant, max one warrant. Okay, the warrant can be traded separately. You can buy and sell off the warrant to anyone else if you want. Okay, the warrant shall expire upon liquidation. So this shut down and you didn't use the warrant, then the warrant will also be invalid. Okay, then simple points, disclosures, etc. And now when they say right issue, preferential issue, QIP, this will all be subject to the compliance prescribed by IFSC. So if you go to see your points like 57, we are on 57. So they have not given you anything. They have just told that as will be prescribed. So it makes our life easy. A listed company may issue right issue, preferential issue, QIB placement, subject to the requirements as will be specified by the authority. Now we come to another chapter, which is called as chapter number 8, listing of depository receipts. Let's see. Listing of depository receipts. Sir, what is depository receipt? I forgot. So there is a separate chapter of depository receipts and you've done in your executive also. So let me tell you in short. So a depository receipt, okay, is a receipt. Obviously when you pay something, what do you get? You get a receipt. Okay, and this receipt is evidence that the investor owns securities specified. Now why it is called as, just like how share certificate is there, it's exactly that, but why it is not called as share certificate and depository, because it is issued by a depository bank, by a depository. And normally what happens, if you remember the concept of ADR GDR, it's similar, it's the same thing only. See, ADR GDR is what? I'll explain the concept, pay attention. Okay, I'll be a bit quick. So Indian companies there, Indian company are not allowed to get listed directly on New York Stock Exchange or any global stock exchange. What we need to do, we need to place these securities. There is a placing of securities, okay, securities with a domestic, that is an Indian domestic custodian bank. The Indian bank, you have to give it to them. They will connect with a overseas depository bank. Okay, so how a depository holds shares in electronic form. So you're obviously you're issuing abroad. So your Indian company wants to issue securities abroad. So they will have to give it to a custodian. The custodian will further give it to a depository bank. And whenever a foreigner is here, he will buy. He will give his dollars. He will give his euro. He will give his pound. He will give it here because it will be denominated in foreign currency. Okay, because we are issuing it abroad. So we issue securities abroad. This is the entire concept where depository receipts will come. Okay, so when they will give the money, in return depository receipts will be issued to this. So this shows that he holds the shares of an Indian company. Now similarly, just imagine that instead of New York Stock Exchange, you want to get listed in a IFSC place, okay, which is also foreign territory. So same process. So let's see, what is it? Eligibility, etc. That we are seeing of listing of depository receipts. So that is also allowed, permitted, no issue at all. Okay, an issuer incorporated outside IFSC is eligible to get listing their depository receipts. So anyone, let's say you're listed in anywhere outside IFSC, can get listed here only if it is authorized by your home country. So let's say Google wants to get listed and issue depository receipts, allowed. Okay, it will be in demat form, fully paid and unencumbered. Unencumbered means what? That it cannot be lien, etc. It will be freely tradable. Now some points you can remember, that the public offer size in this threshold is very common now. It will repeat itself. 7 lakh. So this is your $7 lakh. The offer size will be minimum $7 lakh. You have to file your draft offer document just like everywhere else. Disclosures will be given. Okay, disclosures will be given in the offer document. Now what all about the true, correct, the disclosures will be given, risk factors, capital structure, issuer details, legal information, financial information, audited financial statements of past 3 years will be given. And one very important thing which is new, which was not there in the IFSCA 2021. So in these new regulations they have added that which obviously companies from all over the world is going to come. So will they follow the GAAP, US GAAP, or they will follow IFRS? IFRS is mostly UK point of view. UK, which works in Commonwealth countries. USA follows GAAP, or whether they will follow Indian standards for the accounting. So how will the financial statements be prepared? Every country is following their financial. This is absolutely fine. You can follow any of them. So if I am listed here, let's say an Indian company is listed on IFSC. So they will follow your Indian laws. Okay, Ind AS. If a company is listed in UK, they will follow IFRS. And if a company is listed in US, they will follow so these are all accounting practices and accounting formats that is there. Pricing, again same points you can write. Book building or this is also same. Offer period will be 1 to 10. Minimum subscription, shall be received of at least $7 lakh. Okay, minimum subscription. Okay, then we see allotment time should be completed. So all these points are same throughout, which is the most beautiful part of the regulation, that the dates and this don't vary. All the allotment, payment, refunds shall be completed within 5 working days from the closure, and this is same for everywhere, IPO, FPO, across everything. Okay, Listing, DR must be listed on the recognized stock exchange. Secondary listing is also allowed, dual listing. Now what is debt securities? So just like equity shares are being listed, even debentures can be listed. On debentures, one of the essential feature of debentures that they are issued with fixed income securities. Fixed income securities. Example, interest is given here. So any investor here of a bond of debentures gets fixed return, fixed income in the form of interest. Okay, the lender gets fixed. Now again what they have told, that chapter number 9 of the listing of debt securities. So we are coming that this regulation covers everything, listing of debt securities. So we are coming to that. Your chapter number 9, okay, which is talking about listing of debt securities. So regulation number 68. A issuer may list its debt securities on a recognized stock exchange either standalone or through issuance of other series of instruments. So I can get my debt securities listed, either only debt securities will be listed or through a series of issuance through one issue, two issue, three issue. That is also fine. Obviously you have to give your offer document, pay your regulatory fees, give the disclosures are all the same. Just learn once, you can write it everywhere. Okay, business risk, financial risk, legal risk, all that has to be told. Minimum subscription. Credit rating. Now mark this as important. This was not there earlier and this is there in these new regulations, where regulation number 72 says credit rating, that issuer must obtain a credit rating with IFSC or any foreign regulator who is from a credit rating agency. So from your 1st April 2025, at least one credit rating must be taken for a IFSCA registered credit rating agency. So any debt securities issued in IFSC, mandatory credit rating is required. This is from your latest, you could say your 2025 this regulations, 2024 regulation. Public issue, appoint a trustee. Now if you go to see, debentures are issued, right? So debt securities are nothing but debentures. So then think that in debentures who all comes? Debenture trustees come, debenture redemption reserve comes. Okay, those have to be complied. Then they go on to say exempt issuers. Now certain kind of issuers, like government also is an issuer of some short-term money market instruments, right? So for them they don't have to comply with these. So stock exchange may relax certain requirements for supranational, okay, multilateral statutory instruments. So any national, multinational company is there, statutory institution is there, sovereign guaranteed securities. So any securities which has been guaranteed by a government, for them relaxation may be given. Common sense. So these are good instruments backed by some authorities, etc. So relaxation may be given. Now we come to the most important part, most important part, something which is very of recent origin and times, which is your ESG debt securities. So nowadays what is happening is your environmental, social and governance factors have become very important. People have started thinking of the planet. Okay, companies have started working towards doing business along with benefiting the people, that is the society, social, and they also think about profit. So ESG is what? Environment, social and governance aspect. Okay, so let's see. Your environment, social and governance labeled securities. So these labeled debt securities are bonds. So these are what? These are bonds issued for ESG purposes. So environment means working towards climate change, etc., or development, social development. So eradicating hunger, making rural areas better, or any other thing. So for them, they have issued various kinds of bonds. Green bonds is environment, social bonds are there, and sustainability bonds are similar lines, and sustainability linked bonds. So sometimes we can have not only working for environment, but at the same time making profit also. So they have some key factors that this link to certain targets will also be there, that we obviously, like Tesla is there, so they are sustainability driven, but they also have certain KPIs, key performance indicators to meet. Okay, let's see. So regulation number 75 says that this chapter says that all green ESG labeled debt securities, including green, social, sustainability debt, sustainability linked, or any other labeled. So anything that has been labeled may be issued, that are issued. Okay, so this chapter applies to any kind of ESG debt instrument security that is applied. Now these provisions are in addition to the general rules that is there, that has to be followed for debt. Now let's see, recognized standard. Now what they have said, that ESG debt securities are there. ESG debt securities are there. Now whether these are benefiting the society, how much they are benefiting the society, so we require some parameters to check them against. Now if I want to know that let's say how much carbon footprint you are having, I need to follow some international standards. So what they have said, that ESG shall be only issued if the funds raised, okay, are aligned with the following recognized ESG standards. So these ESG money that I am raising have to meet any of these standards, whether the European standards, whether the Association of South Asian standards, climate bond standards, or International Capital Market Association, which is a international multilateral institution. So they all issue certain standards for ESG. So any ESG is issued must be aligned with any of these standards. There will be a independent external reviewer who will be now this is also a new point that they've added, that a reviewer will be there. He will see whether these ESG are actually benefiting and meeting the thresholds or no. Credit rating agency will be appointed. Proper disclosures will be given about the statements, the objective, the uses of the fund, the monitoring. Okay, sustainability linked bonds. So I told you, what are these sustainability linked bonds mean? What? Like your Tesla, they operate on sustainable methods where they do not damage the environment and at the same time get the business working, get the goods and services without damaging the environment. So sustainable itself means using the natural resources, using the resources with causing minimum impact on the environment, least damage. Okay, so all that is given. They will look at certain thresholds. Additional standards utilization. So annually they must disclose. So the issuer must additionally disclose utilization of money every year. Where did they use it? How much impact they have caused? Okay, what all targets they have achieved, etc. Okay. Then they said that even listing of other financial products like your commercial paper, your REITs can all be done under these regulations. Your listing of your COD. Now it's not that I have summarized, they are actually like this. Okay, so if you see regulation number, see these are actually short. Listing of other financial products like your REITs, commercial paper, COD. So they are saying issuer may issue all of this for the conditions specified, they will do. Then we come to one last part, which is called as LODR regulations, listing obligation and disclosure requirement. So now you tell me, what is, so all till now what we saw was all about ICDR, similar to ICDR lines. Okay, IPO process, FPO process, or debt issues if you are issuing. Now we are seeing your LODR process. So in LODR, what is it? It's an entire disclosure only, na? continuously keep disclosing your financials, your quarterly results. So similarly, a company getting listed in IFSC has to follow your chapter number 12. Okay, so what is chapter number 12? Very similar. Just remember your LODR provisions, your capital governance, same points will be given. They have to comply. Okay, they will comply with the accounting standards. They will ensure that they will avoid misrepresentation. They will ensure equal access of information. The entities must ensure that all the responsible person fulfill their legal regulatory requirements. Very, very, very important. Regulation number 86. The world's most important professional should be appointed as a compliance officer. So if you go to your regulation number 86. Okay. That a entity shall listed entity shall appoint a qualified company secretary as its compliance officer. So extremely good, and for company secretary the scope has increased. They will ensure that all the disclosures are made within 24 hours. Okay, for material events. For a policy for materiality will be framed and disclosed on the website. Amendment must be made and disclosed immediately. Then prior intimation should be done when they are doing certain corporate events. Meeting should be done, disclosure should be done, changes in KMP should be informed, adverse opinion must be informed of the auditors. Okay, shareholding pattern should be informed. Now your financial statements. Regulation number 96, financial statements. They must also disclose financial statement within 3 months of the year end, and quarterly financial statements within 45 days from the end of the quarter. Quarterly financial statements must be disclosed within 45 days, and annual should be disclosed within 3 months from the year end. So this we can write LODR provisions. Annual report should be made and published on the website. Deviation should be informed. Very, very, very important. Okay. Your sustainability reporting. So what is it? That entities with a market cap of at least $50 million should disclose their ESG sustainability report within 6 months from the end of the financial year. So big companies will have to do a sustainability reporting of what they have done and whether they have complied with the ESG practices or no. Okay. Whistleblower mechanism should be there. There should be a fully functional website, and all the information should be disseminated to the stock exchange immediately. So these are your basic LODR provisions that is there. Okay, and then we are completed with the entire chapter. Everything with respect to the regulation is covered, and everything will come from your own. Thank you. Done. So we have completed with the entire chapter, guys. We've completed with the entire chapter. These notes I will be sharing with you all. You all can go ahead and get these notes also. Okay. I will share it in my WhatsApp group and Telegram group for all CS professional students. Okay. Now we will start with another chapter which is called as REITs. Okay. Now we will start with REITs. Till now, is everything clear? I want clear in the chat box. Until now, if you were following from your module, ICSI module, or your notes also, absolutely fine. It is the same flow. There is nothing, no. Only the thresholds had changed. That's all. Okay. GTG in the chat box, clear in the chat box. I'll come to know whether you all have understood or no. Clear? Great. So now we'll start with the chapter called as REITs. Gautami, great. What about others? Do like the video also. Okay. Let's start with the chapter called as REITs. GTG, Apu, great. Okay. Now in REITs we will also do that SME REITs which is there. Okay. So we'll take a break, and then after the break we'll start and continue. Till that you can revise some chapter, etc. We will start at 8 p.m. We'll start it at 8 p.m. and complete the entire chapter. Okay, once we do that, obviously REITs will get over, and then InVEETs will also get over simultaneously. So these two chapters we are going to target. Okay, so we return back at 8:15 or 8. I think 8 is enough. Okay. Okay. Great. Okay. Yeah. So am I audible and visible to you all? Just please can you all put in the chat box so we can quickly start and complete this chapter. Okay. So quickly can you all tell me in the chat box if I'm audible and visible so we can start. Just waiting for your confirmation. Okay. So just write audible in the chat box, audible, visible, so I'll quickly start. Audible and visible in the chat box and I'll quickly complete this chapter for you. Okay, audible and visible in the chat box so I can quickly start and complete this chapter for you. Okay, Apu, am I audible and visible to you? Okay, let's begin. Waiting for a confirmation. Audible, great. Hi. So we'll be starting with a chapter called as REITs, Real Estate Investment Trust. Now what is exactly a real estate? Now a REITs is basically a kind of a unit or like a share how we buy or how you buy a unit of a mutual fund. Here you can also buy a unit of a REIT. A REIT, it collects it pools all the money from all of us and then they buy real estate from which income will be generated. So what does a REIT do? REIT pools in money from all the investors just like our mutual fund does. But mutual fund is very generic, they can invest anywhere. This specifically invests in real estate and income generating assets. Okay, so let's understand how does it work. Okay, so first of all, let me explain the entire concept to you. What happens is just like a mutual fund, okay, just like a mutual fund, a REIT is formed in the form, the person who forms it is called as a sponsor. So the sponsor is the one who starts the REIT, who starts, initiate or is the founder of the REIT, is the promoter kind of a thing of the REIT. Now REIT obviously requires a structure to be made, right? So you need to form a particular structure. Company, LLP, firm is a legal structure. So the legal structure that is formed is called as a trust. So a REIT is formed in the form of a trust. Okay. Now when there is a trust, obviously there will be certain trustees. All these trustees will be there and as per law, the trustee here will be someone who is a debenture trustee registered with SEBI. So they act as a trustee here. Now once, who do they protect? So all the unit holders who are there, unit holders, they pump in money into the REIT. Okay, even the sponsor has to mandatorily pump in money, invest into the REIT. After the money is pumped in, then the trust will have certain people called as property managers. Okay, so they will have certain property or investment managers with whom we will have a investment management agreement. Okay, that they will identify various real estate properties with the funds from that we receive from the unit holders and the sponsors. We further go ahead and buy assets, real estate assets. Now these assets could be a commercial property. Okay, they could be in the form of a shop, could be a form of a setting up of a mall, or could be in the form of setting up a garage or a warehouse. etc. So once this asset is bought, obviously they will be putting it on rent, and this will generate revenue. Now after this revenue is generated, the REIT will then distribute it to all its investors. So that is the concept of a REIT. Let's see. Okay, so there is a So what is a REIT? Now obviously I'll tell you all important things from the chapter that you all can mark. So REIT is a form of an investment vehicle that invests in rent yielding completed real estate properties. Now when I say completed means what? OC must have been received. Okay. Now the history they are giving you, but we'll directly come to the important part, that the law that regulates REITs in India is SEBI Real Estate Investment Trust Regulations 2014. Every single REIT, if you see, it is SEBI, right? If I tell you SEBI REITs regulations, means it is listed. Every single REIT in India has to mandatorily be listed on the stock exchange. Okay, so there is no REIT in India which is unlisted. Now these will be traded, the units will be traded. Now they've just given you a history. So it started, the act was passed in 2014. The first one was Embassy Park, the first Indian REIT which was listed in the stock exchange. It was in 2019. It came out with a IPO of 49 billion. Then came they brought in another one with Blackstone again. Okay, Embassy and Blackstone developers to buy 7 offices. Then Mindspace, etc. Brookfield. So if you go to see, there are all these REITs operating: Embassy Park, Mindspace, Brookfield, IIFL, and India Retail REITs. Now I also prefer investing in REITs because what happens today, people cannot directly buy property. So what they will do, they will pool all of their money together and then they buy property, put it on rent, and the profit or rent is distributed among the investors. Okay. So how is REIT different from a mutual fund? Mutual fund is generic. Okay. Mutual fund could be unlisted also. Okay. Then mutual fund does not really have to invest only in real estate. Okay. And mutual fund is regulated by mutual fund regulations. So what is a REIT? A REIT is a structure which invests in real estate. They have to be mandatorily listed and they are regulated by 2014 regulations. Okay. Now if you see this structure, okay, now the structure I'm going to make it a bit more complex for you. So very first thing is, as I told you, a REIT is formed in a structure of dash. So as I told you, it is formed in the form of a trust. Therefore, there will be trustees, and this trustees has to mandatorily be a debenture trustee. To manage all the investment properties, the real estate properties, they'll appoint a manager. Okay, his job is to property manager or investment advisor, which to buy. Because whenever you're buying a property, you own a property, you will have to see having rent agreements to go and collect the rent, water leakage is there. So property manager is appointed to maintain the property. Sponsor is the one who has started the particular trust or who has formed the REIT. Inducted sponsor is a new sponsor who has come. For example, if a sponsor must have sold and a new sponsor must have come, so that how promoters also can sell their shares. A new company comes, there is a transfer, to the acquirer, you have sold your company. So inducted sponsor is called as a new sponsor. So they pump in the money. Now pay attention to this structure, this last pass, holding company, SPV, real estate assets. Now the investment in REITs. Now we have who pumps in the money. It's the unit holders. Unit holders pump in the money in the REITs, and the other category who pump in money are the sponsors. The sponsor also pump, or the inducted sponsor, the new person who is coming as a sponsor will pump in money. Now who do they give the money to? They give the money to the Real Estate Investment Trust. Okay, REIT. Now REIT will further buy property in real estate assets. So real estate assets will be bought. Now there are different modes. There are three kinds of modes that can be there. There can be 1, 2, 3. Okay, very simple. So how is a REIT holding property in the real estate? There are in total 3 methods. How many methods? 3 methods. First is a REIT can hold it directly. So directly they are holding the real estate. For example, the real estate with the real estate trust directly bought a shop, directly bought a particular mall, directly bought some property, commercial property, office, etc. The second method is appoint a holding company. You make a holding company, and this holding company will then buy the real estate. Okay, so this is another method. Through the holding company they can buy. So holding company will hold the assets, not the REIT trust. Third is the most common for big companies. Okay, holding companies there, they will have a special purpose vehicle, and this special purpose vehicle will buy the real estate asset. Okay, so the first is clear. In a very small company, a very kind of a REIT, directly the REIT buys the property. Second one, you keep a holding property and they do. And the third one is the REIT will set up a holding company which will set up a SPV, and this SPV will hold the real estate asset. So how does it work actually? The REIT will have a holding company. Okay, this holding company can have multiple SPVs, can have SPV1, SPV2, SPV3, SPV4, and then each one will have a different kind of property. This will have a different kind of property, property 1, property 2, and so on. Sir, why like that? Different properties, different SPV. For example, location wise I want to segregate, company wise I want to segregate. So each SPV is a company. So each SPV is a company only. So for example, if this is my Goa based property. This is my Goa based property. So for my Goa based property, I will set up a company, and then this will buy. The investment manager, the area will be completely different. If I want to go in Tirupati. Now Tirupati is a different place altogether. The crowd who is coming is more on the religious side. They are more looking for for religious purpose they are going there. So therefore I would want to segregate this kind of a SPV and hold they are holding. Third could be if it is in J&K, Jammu and Kashmir. So I will have for different locations different SPVs, and that SPV is holding the property. Clear? So this is the third form of structure. So this is what I was telling you. Holding company has a SPV and that buys the real estate, and from that real estate where all I can buy. So you can buy offices, warehouse, marriage hall, theater, mall, hotels, all commercial properties you can buy, from which you will get revenue. Okay. Now this table, this is very important. Why? Because the entire chapter is summarized here. The entire chapter is summarized here. So first thing is I will ask you, you have to learn the figures also. Okay. Now, first thing is which is the law that is applicable to SEBI real estate regulations. Second, the REIT is formed in which structure, legal structure. So it is formed as a trust. So Indian Trust Act 1882, it is set up under that. Okay. Then who are the parties? So party is a sponsor, new sponsor, manager, property manager, and trustee. Okay. And last they told unit holders. Now mean thresholds which are there, which you have to remember. Okay. Very important. So first thing is, I'll make you learn also, not a big deal. They are saying the sponsor's obligation, how much the sponsor should have. So how a promoter is there, promoter how much he should hold. So remember this point is 5%, 15%, 3 years and 1 year. 5, 15, 3 and 1. You have to learn this very well, that each sponsor should have a minimum investment of 5% in the REIT. 5% of the units are bought by each sponsor. Now a sponsor could be multiple sponsors, so the entire sponsor group should have 15%. Okay, and each sponsor 5. And total units for a period of 3 years from the date of the listing. So for 3 years lock-in period is there, and anything excess than that you have to hold for 1 year. So again, one sponsor, each sponsor has to hold 5%. Collectively, all of them will hold 15%. For how much time is the lock-in period? 3 years. And if anything over and above that minimum requirement, so this is very similar to promoters contribution that is there. Okay, now I told you who are these trustees. This trustee has to mandatorily be a debenture trustee who will look after the interests of the unit holders. Okay, and obviously this trustee has to be independent party, cannot be connected with the sponsor or the manager. I told you there is no REIT in India which is unlisted. All REITs in India have to be mandatorily listed. So listing is mandatory of the units. Now investment conditions. Okay, so what are the investment conditions? Certain numbers I will tell you. Over a period of time you will have to know it. Okay, by heart. 80%, 20% and 90%. These three thresholds I want you to know. Sir, what is 80, 20, 90? 80, 20, 90. So how much of the money will go in completed projects? So at least 80% of the REITs assets should be held in completed and revenue generating properties. So very simple, completed and revenue generating properties. At least 80% of the REITs assets should be invested in completed and revenue generating. Rest 20% can be invested in under construction properties. Sir, under construction means what? Means development for which OC is not received. I can invest in real the webs this on like listed companies you can invest, mortgage backed security other than completed projects. So I'm investing in other securities, in equity shares of other real estate companies where at least 75% of their income is coming from real estate activity. So I can invest, a REIT can invest in Godrej, can invest in Lodha. Why? Because I'm investing in another company who's getting majority income, 75% of the income from real estate. Means invest from there. Government securities, I can buy FSI, TDR, money market instruments, etc. Very, very simple. So what was it? 80% in completed, 20% in under construction, in units of other real estate companies, to buy TDR, to buy FSI, all of that I can use. Now valuation. Now obviously you are dealing in real estate. So to do the real estate valuation is very, very important. Full valuation on a yearly basis. Okay. And rechecking them every half yearly is mandatory, and declaring them within 15 days from the date of such valuation. So again, properties have to be checked. Full valuation has to be done 1 year. Full valuation once in a year. Half yearly, you have to keep updating it, rechecking it, and whenever you have got the report within 15 days, you will circulate. Distribution. So 90 you did not tell here, 90. So what is this 90 provision? Very, very, very important. Now we will see. Now one of the cool features of REITs, okay, that they are beautifully dividend paying companies. What does that mean? That if I invest, now I have invested in REITs, so regularly I keep getting dividend, because by law it is mandatory that 90% of their income that they get through rent or through capital gains has to mandatorily be distributed as dividend. How much? 90%. So at least 90% after tax shall be distributed as dividend. Okay, and this is common that unit holders on a half yearly basis, you have to keep distributed on half yearly basis. Okay, and moment the half year is over, not later than 15 days. So at least 90% of the net distributable income after tax shall be distributed as dividend. So they will have to give dividend payment. Okay, and if nobody takes the dividend for 7 years, what to do? You have done company law now. 7 years, if nobody is coming to take the dividend, what you will do? Very good. You will give it to your IPF. Okay, Investor Education Protection Fund. Now, modes of investment in properties. REITs can invest directly, as I told you, the modes, the methods, either directly in property or through a holding, and then SPV, then you will do. Okay, so REITs can invest directly or through SPV. Okay, and then you will hold your assets. REITs shall hold controlling interest in not less than 50% of the SPV. So very, very simple. Here you have the REIT. Okay. REIT will have controlling stake in the SPV. So they should have, in the SPV, they should have at least 51% stake. Simple. Now, coming to this initial offer. Now, very, very, very important. I want you to note it down, learn it, write it on your hand, etc. Whatever it is. That initial, like 250 crores and 500 crores. See, there will be one more limit of 500 crores. There will one more be limit of 500 crores. Sir, what is it? You have to remember this. Now, when they are coming, REIT is coming out with an IPO, minimum offer will be of 250 crores. And they have to buy minimum assets of 500 crores. Sir, if public is giving 250, balance who will get? Promoter, sponsor. So better I raise from the public 500 crores only, because otherwise I will have to get. Again, what is the minimum offer that I can make to public? The minimum offer size should be 250 crores. Okay. And value of assets by REITs shall be 500 crores. So minimum you should buy of 500 crores. Balance amount will have to be bought by sponsor. Okay. Now, minimum how many unit holders will be there? 200. Market as super important. 200. How many unit holders are there? 200. Minimum number of unit holders are 200. Now, we come to this minimum subscription amount. Again, very important. Okay. Minimum subscription amount will be, how much they have given you? 10,000 to 15,000 rupees. If an investor is there, he is giving in money, okay, for the subscription in the REITs, 10,000 to 15,000, okay, and minimum offer to public will be 25%, as we always know. And very important is, trading lots will be of one unit. Earlier, it used to be 10 and 100, so you could not buy 1 unit. Today, you can buy even 1 unit of a REIT. So, for example, if today you want to buy 1 share of Reliance, you can buy. Similarly, 1 share of you can buy of REIT also. Earlier, you couldn't. So, minimum lot size or trading lot will be of 1. Then come loan. For loan, you have to remember this figure, 25% and 49%. Means, now this we are talking of borrowings. How much borrowings they can take? So borrowings can be taken up till 25%. Beyond 25% you take approval, and beyond 49 you cannot, with approval also you cannot go. So max borrowing will be 49%. Up to 25% they can take, but more than 25 you require approval. See, the aggregate consolidated borrowings can never exceed 49% of the value of the REITs. If the borrowings exceed 25%, then you require approval from the unit holders and a credit rating. So mark this as important, that if the borrowing is going more than 25%, then approval from unit holders and credit rating is required. And we are done with this part. Okay. So quickly, if I try to recap, what all figures and numbers can I recollect? So I think that promoters' contributions of 5%, okay, was there, 15% was there, 80% was there, 20% was there, 90% was there. Then we saw about the borrowings. What was the borrowings? 25% and 49% was there. Yes or no? Then came minimum this application, 10,000 to your 15,000, right? Then there was one more figure of 250 crores. Okay, and 500 crores. So this is the offer size, and this will be the minimum asset size that is there. Clear? So I believe I have covered the major part of the particular points. Okay, so, and very important, the number of minimum unit holders will be 200. So this is all we need to know. Okay, now we go here, definitions, very simple. Not all are important. I'll go directly to what is important. Okay. SPV, etc. we've done. Now we see eligibility. Okay, who can set up a particular REIT? If you want to set up a REIT, what you will do? So obviously you have to first be registered with SEBI. Now SEBI will say that before granting, SEBI will say that did you form a trust under the Indian Trust Act, and the sponsor must be the applicant must be a sponsor, and we'll see how much the sponsor has to invest. Did you make a trust deed? Trust deed, right? Trustee. The trust deed has to be a trustee, has to be a debenture trustee, and whenever it has to be registered with the Indian Registration Act 1908. So property is registered. So whenever remember we did transfer of property section 17, compulsory registration wherever immovable property, certain rights, title, interest is created. So obviously we are immovable property, are creating certain rights. This trust deed has to be registered. Okay. Now sponsor, sir, how much sponsor? I told you there were certain figures of 5%. Okay, minimum 5% of the units he has to buy. Collectively, how much he will hold? Collectively 15%. Okay, one sponsor should be there at least in one sponsor group. Net worth requirement. Market is important. Net worth. So in the earlier tables which we had seen, you want to write the net worth. Normally they didn't give you the net worth there. So net worth will be 100 collective and 20 each. So the sponsor should have a net worth of collective. Sponsors should have a collective net worth of 100 crores, and each sponsor shall have a net worth of at least 20 crores. Okay, so each 20, collectively 100. Now again, the sponsor is there, he's setting up a REIT, but he needs to have experience in real estate, and I need to have minimum 5 years of experience with 2 completed projects if he's a developer. Experience requirement. So the sponsor should have at least 5 years of experience, and if the sponsor is a developer, okay, then they need to have 2 completed projects also. Let's see. Then we came to the property manager. Sir, who is property manager? Now I told you you're dealing in real estate. To get the painting of the property, to collect the rent, to do all the property documentation, you require a property manager, right? So for property manager, their net worth will be 10 crores. So that also you can write. Will have to be a body corporate, okay, and whose net worth is 10 crores. They also need to have experience of 5 years with minimum 2 personnels. Okay, 2 personnel they should have, and they should have experience in advisory, real estate management, property management. Okay, and an agreement will be entered. The trustee will enter into a investment agreement with them, investment management agreement with the trustee. So just to look after the property, where to invest, etc. Trustees who are there, they have to be compulsorily registered with the debenture trustee regulations 1993. Okay, and trustee should not be connected with anyone and should have adequate infrastructure and personnel. Then food should be fit and proper person, no disciplinary action, etc. Now we come to another important thing. Again, they have summarized this part. Extremely important. Now, as I told you that a REIT has to be mandatorily listed. To be listed, they will have to come out with a public issue. So in public issue, you have to remember the chapter that ICDR which we do. In ICDR, how you have a merchant banker, your minimum application size, between this much time you have to do. So all those points will be same. We will see some important points out here. Okay. So first thing is issue and allotment. Can a private placement be done? Answer is no. Initial offer has to be only by way of public issue. 500 crores and 250 crores I had already told you. That 250 crores and these 3 figures have been already discussed about. 200 unit, number of unit holders. How many unit holders will be there? 200. 250 crores is what? What is 250 crores? The offer size. And 500 crores is the minimum value of the REIT will be this much. Okay. Now minimum public shareholding. So normally they have said the minimum public shareholding. This also you can mark it as important and learn it. It's very simple that it is normally always we say 25%. So here the thresholds are exactly in this, that if the post issued capital is less than 1,600 crores, then it is 25%. But if it is 1,600 crores to 4,000 crores, okay, but less than 4,000 crores, then you need to have at least 400 crores. And third is, if it is greater than 4,000 crores, then you need to have 10%. So you have to learn these thresholds: 25%, 400 and 4,000 point of view. That's it. Okay. Now coming to this offer document. Now this is something like, just imagine when a company, listed company, is coming out with an IPO. They will come with a draft offer or document. DDC report will be made. DDC is a due diligence certificate, will be given by the merchant banker, etc. Offer period will be of 30 days. Allotment. Now again, one very common point is there, that the allotment shall be in demat form only. Okay. And when to refund the money. So minimum subscription. If minimum subscription not receive, refund the money. Okay. If applicants are less than 200, refund the money. And one common point is there that will come, that imagine I raise the money of REITs and I'm using it for different purposes, allowed or not allowed. I take REITs and I'm doing party. I've raised money for REITs and now I'm doing party. Allowed or not allowed? Okay. So obviously not allowed. Maximum they have said, max general corporate purpose you can do is 10%. So maximum 10% of the amount can be used for general corporate purposes. Very, very good. Okay. Now again, we'll just repeat it. They're repeating the same thing. So I'll tell you which is important. Issue and allotment. So only by way of public issue. Must be registered 500 crores, 200 crores. That thresholds is there. Now one point they have said, that maximum subscription by a single investor, 25% cap is there. Means no person is allowed to have more than 25% in one particular REIT. Offer size 250 crores we've already done. 500 crores also we have done. Okay, excellent. Okay, this also we had done. Public issue minimum will be 25%, but it is only till 1600. Then from here till 4,000, so you can just take a 10% of this 400 crores, and then this is there 10%. Understood? Higher cap, you just take a 10% just in case if you want to remember. Okay, we go there. Then subsequently, once initial public issue is made, then you can nicely do follow on, preferential, private, right issue, bonus shares. This is the common sense you can do. Listed company can always do, but initially it will always be public. Now coming to some points, they will start off SEBI issue, which is not related to REIT. It's just like any issue, that process will be followed. So you'll be able to do like making a draft letter of offer, having a merchant banker vetting it, getting the comments from SEBI, okay, getting a DDC from merchant banker, due diligence certificate, SEBI giving any comment you have to do, incorporating the comments, etc. Filing. Now this is one thing which is there, that moment you have filed and it has been approved, and within 1 year you have to come out with the IPO. So within 1 year of SEBI's observation, this is always common. It's nothing new. It's there in every regulation, that I have applied, SEBI gave their observation that you can go. Within 1 year I have to come out with an IPO. I filed the draft letter of offer, SEBI approved. Now within how much time I have to go with an IPO? Within 1 year. Okay, so within 1 year you have to come out. You can even get foreigners to invest. You will have to take RBI permission. Minimum subscription, sir, we've already done 10,000 to 15,000 max. Offer period also, sir, we know it's a common everywhere. It is maximum. The offer period shall be open maximum for 30 days. Excellent. Over subscription is there. You can either give it proportionately or the company will decide how to give. Allotment, refund should be done. Dematerialized form. Okay, refund the money if all these thresholds are there, etc. Offer for sale. Now, offer for sale is also a very common point. What is offer for sale? That pre-issue holders, investors who are holding for 1 year, they are eligible to participate in offer for sale, that whenever public issue comes, they will knock off their shares and leave. Okay, general corporate purposes will be max 10%. So what happens is you study the table and then when you read this, it's a recap. Okay, so now offer document shall contain all true, correct, adequate disclosures to make the so that the investors can make their investment decisions. Advertisements should be nothing. Now this is also very interesting line, that the no advertisement should be made containing anything which is extraneous to the contents of the offer document. Sir, what does it mean? If in the offer document whatever is there, in the advertisement only those things can come. Nothing outside the offer document can be shown in a advertisement. Simple, easy, beautiful. Okay. Now, let's see. Very simple, very simple. Okay. Yeah. Now we are coming ICDR, LODR point of view, that whenever we are coming, draft letter of offer will be there, merchant banker will be appointed, all the details and the offer documents etc. will be on the this you can just learn. I don't think they will ask you. Otherwise, you can write generic only. They are not specific in this. So, website, all of the draft offer document will be put on the website. SEBI will give you modification. You should do it. Allocation. Now, as I told you in the start only, minimum offer to public is how much? So, 25%. So, what is the maximum non-public, or what is the maximum promoter holding that can be there? 75%. No? If minimum 25 public is taking, so non-public can be maximum. Non-public means promoter holding can be maximum, or sponsor holding can be maximum 75%. Sir, so simple. No investor shall be allocated more than 75%. Obviously, because minimum we require public, na 25%. Excellent. Now comes anchor investor. Anchor investors are those who invest 10 crore rupees. This is same as ICDR, na? So we can go faster. What is it? Anchor investors. In your IPO, now you have to come out with an IPO. There are some anchor investors who will come. Anchor investors will bring in 10 crores or more. So he's a very big guy for you. He's anchoring your investment. Now, if you are coming in chapter 9, okay, then it must be at least 2 crore rupees. Okay, chapter 9 is different. Only it is in your IDR. So ignore that. Okay, your depository receipt chapter. Now allocation. Similarly, how much I can allocate to anchor investors? 60% of the institutional portion can be given to anchor investors. So, for example, if this is the total institutional investor portion, so from that 60% of that can be given to anchor investors. So, anchor investors are also in QIBs who invest 10 crores or more. More. Okay. Now, what is the benefit that an anchor investor gets? So let me tell you the concept and make it simple for you. What happens is, in a public issue, so many times people come to invest. Now all small people are coming. We want big players, right? Big investors. So they are called as anchor investors. Just like big people, they get benefits. Here also they are getting VIP treatment. They get to bid for your securities 1 day prior to issue opening date. So before the public comes in, they come and they bid 1 day before, and on that day only allotment is done. See, bidding for anchor investor opens 1 day before the issue opening date. So before it is open for public, 1 day before, these big shots come, and allotment is also done on the same day. So beautiful. All the disclosures will be made. Okay. Anchor investor cannot be issued at a price lower than what is given to public. Okay, so obviously Ambani doesn't need your discount. Lock-in period. So when they buy, it will be locked in for a period of 30 days. Okay. Now, another point we can write is security deposit. In public issue, when you're coming, you're removing, you have to give a deposit to SEBI. So that will be 0.5% of the public issue that you're coming, or 5 crores, whichever is lower. Sir, how much? It is basically 0.5% of the offer to public or 5 crore rupees, whichever is lower. So security deposit has to be given. Now opening of the issue and closing of the issue, very very important and easy. That the opening date, okay, the issue must open at least 5 days after the final offer document is filed with SEBI. So moment that final offer document is there, issue should open within 5 days. DDC must be received. Duration of the offer period 3 to 30 should be minimum 3 days and maximum 30 days. Offer period, like how we tell Diwali offer, this offer, maximum 30, minimum 3 days. Okay, you can revise the price twice. Price band can be given, differential pricing, bidding process. Now remember one thing, same like what happens is you can have a fixed price method or you can have a book building method. In book building, bidding is done, so for that you require ASBA process. That means whoever makes an application, it will be supported by a blocked amount, and this ASBA is given by self-certified syndicate banks. So you can just write what you know here. So self-certified syndicate banks, ASBA, and bidding process and book building issue will be there. All these terms you can write and frame it. Okay. Very important, you have to appoint a compliance officer to address the investor grievances. Now come to delisting of units. Sir, what do you mean by delisting of units? Very simple. That if imagine SEBI did not like what you did, or investment manager feels that you're not doing a good job, or trustee feels that your the purpose cannot be fulfilled, or the unit holders pass a resolution. In all these cases, you can delist your securities. Okay, if there is no project for a period of 6 months, then also it can be delisted, violated, all these things. Now investment and distribution policy. Sir, you had explained 80%, 20%, that 80% will go in completed, this will go in other, and 90% point you had told something. This is also very very important, this entire thing. So 90% will be distributed as dividend. Okay, now we are coming to all those things. Okay, you are permitted to hold REIT assets either directly, either through holding company or through a SPV. Okay, which investments you cannot hold? Obviously agricultural land, vacant land, mortgage assets you cannot hold. Now 80%, 20% I told you, and the most important is 90% part will also come. Okay, now just one thing, this, a REIT shall hold any completed and revenue generating property not less than 3 years from the date of purchase. Means, can REIT buy and sell the property today if they bought, tomorrow they sell? Obviously no, it's long term. So REIT shall hold completed and revenue generating property for a period not less, means at least property should be held at minimum for 3 years. So this is important. Okay, next, approval for sale exceeding 10% of the REIT assets. So if for any sale of property, when you are selling a very heavy property, okay, which is exceeding the 10% of the total value of the assets, then you have to take approval from the unit holders. For example, I am selling a very big asset which is more than 10% of the REIT assets, then I require approval from the unit holders. Okay, now %, very 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 important part of REITs, that at least 90% of the net cash flows, okay, should be distributed as dividend. Okay, and such distribution must be made at least once in 6 months within 15 days of declaration. So half yearly distribution will be done. Now if sale is there, okay, if a property is sold, If such sale proceeds are reinvested, then it is fine. But if it is not reinvested within 1 year, then 90 proceeds of that will also be distributed to the unit holders as dividend. So for example, if a particular property is there, it has been sold, so capital gains, this sale of asset, if not another property is not bought, then within how much time? Within 1 year, then I have to distribute that full amount as dividend. Distribution, very very important. Regulation number 28 states that 90% should be given once in 6 months, and within 15 days of declaration should be given, otherwise 15% interest. I told you, if nobody, this is given as dividend, right? So if nobody comes to claim, it will go to IPF. Borrowing part, sir, borrowing and deferred payment already we've done. What? We did. Remember I told you max 49%. If it goes up to 25% is allowed, but if it exceeds 25%, you require consent and the credit rating. So REITs can borrow, may issue debt securities, they may borrow 49% max, 25% if they go, then credit rating and approval of unit holders. Now, rights of unit holders. What is a right? They can attend meeting, they can get the dividend, they have special resolution for certain things, etc. Okay. Now, decisions requiring higher approval. Some matters require ordinary special resolution, they are saying. Disclosures has to be given. Now, all these related to LODR, that's fine. Now we come to one important thing, strategic investors. Very, very, very important part about strategic investors. Sir, who is a strategic investor? So strategic investor, it has come in the past exam also. Huh? So who is a strategic investor? So strategic investor is any person who invests 5% or more in the total offer. So it means they are investing how much? At least 5% of the total size of the REITs. They are a strategic investors and offer, so invest 5% of the total offer of the REITs. But it is these people only. So strategic investor means any of this, any infrastructure, schedule bank, all of this, portfolio managers, etc., who either jointly or separately invest so much. So what if they invest 5%? So now we come to the provision which is applicable to them. So first you understood strategic investors. So strategic investors are these 7 categories when they invest 5% or more. Okay, in REITs, they are called as strategic investors. Now, let's see the rule with respect to that. Strategic investors means they invest minimum 5% and maximum 25%. Why 25? Max. So they told you that between 5 to 25 max they can hold. They are told that no person can hold more than 25% in our REITs regulation only. Second, public investors. Public must hold at least 25% other than strategic investors and sponsors. And sponsor must hold a minimum of 5% and a maximum of 70% of the units. So sponsor how much is holding? Minimum 5 and max 70. Why 70? See, pay attention. What is the bifurcation? That sponsor should hold minimum 5. That we had seen that each sponsor should have minimum 5. And they're saying max 70%. Normally it is 75, na? But here they have said that strategic investor is investing 5% or more. Means he is investing 5%. And public has to have how much? Public will have 25%. So public will have 25%. This guy is taking minimum 5. So how much is left? 30 is only left, na? The 30 is already gone. So only 75% he can hold. So very simple logic that 5 strategic investor is buying. 25 public is buying. So 30 is already gone. So rest sponsor can buy. So sponsor can buy max 70%. And some points they have given you for these big short people, that the price offered to strategic investors shall not be lower than what is given to public, and the subscription amount must be kept in a separate account altogether, and it will be locked for 180 days from the date of listing. So the subscribe portion is there. So again, let's see the points and close it. Again, what is the point? That strategic investor is means all these people who are investing 5%. For them, 5% minimum they are holding. Public is 25, and balance is your sponsor. Okay, and they are big short people, right? So they don't require discount. You cannot offer at a price lower than what is offered to public, and the amount will be blocked for 180 days. Okay, now with this we finished REITs. Now we'll start with a topic which is called as SME REITs. Now we'll come to a topic which is called as SME REITs. Okay. SM REITs. Okay. We'll start. Till now, is it clear? Yes or no? In the chat box, is the concept clear? Yes or no? Till now, is the concept clear? Yes or no? Then we'll start with the amendment part, which was your this. Divya. Okay, great. I'm glad you liked it. Divya, Ashwarya, thank you so much. The more you all say, it makes me more happy. Okay. Apu, great. Okay. So now we'll start with SME REITs. SME REITs in some time, which is also the amendment that has come. Okay. Give me 1 minute till that you can revise. Okay. Okay, so am I audible and visible? Great. So we'll start. Hi. So we'll be starting with a concept which is called as small and medium REITs. Now let's understand the concept of a small and medium REITs. Now, what is a REIT? A REIT is basically a pooling of money and buying real estate properties. The money from the real estate is then distributed to the unit holders. Now, since when you see the thresholds that the minimum investment in assets for a REIT was 500 crores. So what used to happen is unit holders used to pool in money. Okay, the money used to be pooled in from the unit holders and then invest in 500 so many properties. So it would, the net assets are 500 crores or more. So many properties would be invested. So then they said that why can't we make a very specific form of REIT which targets a smaller section where I exactly know where I want to invest. Okay, for example, if I know that I don't want to invest in a very diversified real estate asset, I just want to invest in a building next to me. Okay, so in Bombay, we know that there are so many properties which are developing and I'm familiar with a certain area. So then they said, okay, fine, we will make a REIT which is not 500 crores or more the asset size. We will make it where it is 50 to max 500. So what is happening is investment will be made in a REIT whose net assets is not exceeding 500 crores. So it's a small projects we are investing. Now, since it's a small project, it will be it won't be that much diversified. So the risk is higher since there is less diversification. So SME REIT is a newer category of REIT in order to invest in small scale projects. Because if I only say 500 crores or more, then only bigger properties will come. But there are so many projects with less than 500 crores. So for them, this REIT has been made. So the same thing will happen, that investment will be made in real estate income generating assets like commercial property, same like REITs. But the only difference is the maximum net worth or the real estate investments will be of max 500 crores and minimum 50 crores. Now they have said that this REITs is designed for high net worth individuals. Since no diversification risk is high, so in order to safeguard retail investors, government has said that let's do something that only sophisticated investors who know what they are doing should be given in this risky project. Okay, so they have increased the minimum investment amount. They have said that the minimum investment amount per person year is 10 lakh rupees. So this is differentiated from the normal REITs. Okay, in normal REIT, the application size is how much? 10 to 15,000 I can invest. Here they have said minimum investment that I can make in SME REIT is 10 lakh rupees. So they want people who know proper knowledge, who have proper knowledge of their market only to invest, because I will invest 10 lakhs only if I am very sure about the project. Okay, so this is the main key difference between REITs and SME REITs. First, the investment size, portfolio of investments will be from 50 to 500 crores only. And it can invest both in commercial and residential properties also. So for example, tell me one project, residential project which is going around your area. Think and tell me. So imagine if you want to participate with the builder, you, someone else, etc. can, invest together, and then whatever gains will be distributed among all of you all. Unlike regular REITs, SME cannot invest in under construction property. So they cannot invest in under construction property. They have to mandatorily invest only in completed projects and revenue generated projects. And normally where REITs distribute 90% of their income, okay, here 100% of the income will be distributed as dividend. Okay, so whatever income comes will be distributed 100%. Borrowing provisions are the same. Okay, diversification is less diversified because obviously it is less money, so less diversification will be able to do. And target audience law has said that we should target these projects. We want only sophisticated investors who know what they're doing. So high net worth individuals, it's mainly targeted to them because they have kept the minimum ticket size of 10 lakh rupees. Okay, who should invest? So who would invest in REITs? Anyone who has higher capital, minimum 10 lakh rupees, is ready to take that higher risk. But for them, they'll say it's not a high risk because I'm very sure where I'm investing. Okay, and even real estate projects will now get funded due to SME REITs, because if a project normally would have been 70 lakhs, okay, or 70 crores, it would not come. REIT could not be made for that, because REIT initially meant only 500 crores or more of assets. Okay, now let's see the differences, and it is done. The key difference and the main difference is the investment amount. We want only sophisticated investors, so 10 lakh rupees or more. Asset size they are saying is minimum 500 crores. Here it is 50 to 500 crores. Okay. They invest in commercial property, traditional REITs, whereas this can invest in residential properties also. The risk obviously is lower in case of traditional REITs. Why? Because there is more money, more diversification. Here it is higher due to smaller properties. Borrowing provisions are same. Okay, value of the REITs, all this will be the same. Now whether they can invest in under construction, normal REITs can invest 80-20, 80% in completed and 20% in under construction, whereas for SM REITs it is not allowed. Distribution of cash flow, this is 90%, this is 100%. So if you remember all the differences also, your job is done. Rest all provisions will be the same. Payout frequency, they have to pay regular half yearly or quarterly. REITs will, depending on the REITs, this has to be quarterly disbursement of money. They don't wait till half year. Okay, so if we go to see the SM REITs, chapter 6b of the regulations. Okay, provisions of SM REITs are applicable to. Okay. Now same provision, everything else will be the same as REITs only. Who is investment advisor? SME REITs, only one thing is there, we've done. It could be done directly through SPV, same provisions. Okay. Application process. Now if anyone wants to start an application process, obviously they will have to go to SEBI since it is listed, and they will have to get they have to pay a fees also of your 10 lakh rupees. Application is made for grant of REITs. All these are generic points. Okay, this is of criteria to set up a REIT. You have the same trustee, investment managers, except for the differences. All the points of SME REITs and normal REITs will be the same. Okay, having these identification, net worth, same. Here they will experience at least 2 years experience in real estate. Normally it was there 5 years of experience was there. Independent advisors, just you can read through, same. Okay, disqualification, when you're not allowed, if you're debarred from stock, willful defaulter, fugitive offender, or has paid any unpaid fines. Now what is important, I'll mark it, that you can remember, rest all is generic. The asset size will be between 50 to 500 crores and minimum investors are 200. Now again, this is also exactly same as REITs. Here also 200, in there also it was 200. Different is in the asset size of the assets. In REITs it is 500, more than 500, here it is 50 to 500. Appointment of merchant banker, same concept. Now another important point, similarly what we've done is minimum investment per person will be 10 lakh rupees. Minimum asset value will be 50 crores. SEBI, and all these points are similar to your REITs only. I will be verbatim same. Now one point you have to remember, that SM REITs cannot invest in under construction property. Full money has to go in completed projects. So they have said that at least 90%, not 100%, is 95% will be given in completed and revenue generating assets, and 5% in liquid assets. Liquid assets could be your unencumbered investments, FD, etc. So all of the money, 95% will go in revenue generating, rest will go in liquid assets. Okay. Lending, same provision, that lending is also allowed. Okay. But SM scheme can lend only to its own SPV, and giving to outside lending is not allowed. So holding company can give, or the REITs can invest, can give a loan to SPV, that is fine, cannot give outside. Fundraising can also be from abroad. Same points from first you do your REITs, then all these points will be the same. The leverages point of view. Okay. So this is also listed, right? So even here the points are the same. The leverage limits, that is 25%, 49%, same points. You have to maintain a functional website, same. All the shares will be in dematerialized form, same. Okay. Lock-in requirements they've given in a different fashion altogether. May remember, but I'll just take you through. That depending on the period of listing. So if it is just a new company, 0 to 3 years, then the minimum public shareholding. Remember how we had done for up how much will be the promoter's contribution? At least 5% of the total outstanding units will be held by the investment manager. Here they are telling you minimum promoter's contribution. It is 5%. If no leverage has been taken. If leverage means loan has been taken, then they have to hold 15% minimum for 3 years. Okay. Excess holding will be held for 1 year. Year from 4 to 5, then 5%, then 3%, then 2%, then 1%. Okay. That is it. Allotment, it will same points they have given, nothing different. That mandatory listing, it is there. Listing agreement will be made. Okay. Public holding, no individual can have more than 25%. This is also same as REITs. Post these reporting are there, which you have to get a due diligence certificate from the merchant banker post issue. Okay. Failure to meet the requirement can get you delisted, and minimum public shareholding is 25%. Distribution of cash flow, 95% must be distributed as cash flows. SM REITs must distribute 100%. So you can take this as important. Okay. How much funds will be distributed? I told you. Normally 90% is given in your REITs. In SM REITs, 100% of the net distributional cash flow is given. Okay. Then this is also same point that cannot, no related party transaction. No transaction with related parties. Rights. Okay. With this, we are completed with the provisions of SM REITs. Once you know the differences, rest all the points remain the same. Thank you. Okay. So we are done with SM REITs also. I hope you've got understood the concept. Okay, SM REITs, very simple. Only some key differences are there. Rest all the provisions are the same. Okay. Now we do infrastructure investment trust, and we'll complete it. Okay. Infrastructure investment trust. Let's see. We quickly complete that also. Hi, so we'll be starting with a chapter called as Infrastructure Investment Trust. Now, all the provisions given below are exactly same as REITs. Okay, so we will be doing a recap of this. The following provisions are mutatis mutandis, exactly the same with REITs. So you need to do your REITs chapter first, then your InvITs will also get over. So definition, eligibility, listing, anchor investors, delisting provision, investment conditions, LODR, rights and meetings of the unit holders is the same. Let's understand the concept of InvITs. Okay. Now what happens? Same. Here you have to create a trust, which will be InvITs. Obviously, if there is a trust, there will be a trustee who will be a debenture trustee. Now the person who set up the InvIT is called as a sponsor. The new sponsor is called as inducted sponsor. Money is given by the unit holders. The money can come, the InvITs will buy infrastructure projects like your, I'll come to infra, roads, bridges, toll tax, etc. So all those infrastructure related projects will be invested. Now one new project manager will be there for each SPV, for each company. There will be a project manager. A project manager will ensure that the project is completed. Okay, like your operations and maintenance. Okay, so your operations and maintenance. Investment manager looks at the various investment opportunities. So a new body is there, project manager. Now let's see the key differences and similarities between REITs and InvITs. Okay, so first thing is REITs invest in real estate assets like office, commercial building, malls. InvITs will invest in infrastructure projects. Okay, like your roads and get toll, highways, power grids, etc. The asset focus is on real estate. Here it is on infrastructure projects. Now income source. So just key the words, you will just change accordingly. Income comes from real estate income like rental income for REITs. For infrastructure you get toll tax, so you will get tariff based revenue. So you will invest in revenue generating projects like your tariff based revenue you get or annuity payments that you get. Okay, minimum asset value same, 50 to 50 same, public holding exactly the same. So all this you can write in case if there's infrastructure. The minimum number of shareholders is also same. 90% threshold is also same, that 90% has to be distributed. 49% the leverage amount is also the same. 25% you require credit rating and unit holders consent, that is also the same. 80-20% rule is also the same. 80% in completed, 20% in under construction properties. Okay, in governance only one person is added, which is called as a project manager additional. Okay, now valuation has to be done annually. Here also it has to be done annually, and half yearly you have to update it. So annual valuation will be done, and half yearly updates will be done. Allotment and refund should be made within 12 days from the closing of the offer. Same. Offer for sale, anyone who's holding it for 1 year can offer it for sale. Subscription period will be between 3 to 30 days. All shares have to be in dematerialized form. Max you can give 10% for general corporate purposes. Historical references you can give. This is Embassy Park and this is IRB, listed in 2007. Power Grid, your India Grid, etc. Now some differences, very minor differences are there, but let's look at the differences. The listing time, within 12 days from allotment you have to list the units on the stock exchange. Here within 6 days from allotment you have to list the unit. And minimum number of unit holders, here it is 200, here it is 20. Yeah, so minimum number of unit holders, this is very very important. Only this is some differences, rest everything is the same. So normally how we say minimum number of unit holders in REITs is 200. In REITs it is 200. Here it is only 20 because the project is also very big, na? And remember one thing, that these kind of projects could be PPP projects, public private partnerships, like roads etc. could be made with the government, or it could be owned also, privately done. Let's see. Okay, rest all is the same. You will have a trust structure. A list has been given. Now remember one thing, that a lot of infrastructure concessions has been given. So you can write these terminologies. Okay, tell you which one. Let's see, anything new. So even public private projects, because normally government and private sector collectively build roads, etc. So you will write in a concessionaire SPV. So a SPV which has got concession from the government for PPP projects are called as concessionaire SPV. You can use that terminology. Rest everything will remain the same. Okay. So and when they say, for this, it is infrastructure project. So completed and revenue generating project you'll invest. So a completed and revenue generating project here refers to an infrastructure project that has the following conditions. Okay, that has achieved the commercial operation date, means it is completed now, so it has got a COD. Okay, through its agreement, maybe a concessional agreement, a power purchase agreement, or any other agreement. So what does a commercial operation date means? So any project is deemed to be completed if it has got its, it has achieved the commercial operation date, or has obtained all the requisite approvals, or has generating revenue for past 1 year. So all these can be called as revenue and completed and revenue generating project. So this was a definition which is not there in REITs. So completed and revenue means they have got the COD through any of its agreement, requisite approvals have been got, and they are generating for 1 year. So then they will be called as completed and revenue generating project. Okay, so that is it. Rest everything remains the same as REITs. Thank you. Clear? Now we'll start with one chapter which is called as this one. We're going to start one chapter which is very easy. Intermediaries. So now we'll start with. So we have completed till now. What all we have completed? We have completed your this. We have completed your lesson number 13 completely done. Your ninth chapter also done. You can say seventh chapter also, as it is gets completed. Then your infrastructure project gets completed, and now we'll just do your one more chapter which is intermediaries. Your intermediaries chapter also we'll complete. Okay, quickly. So we'll start in 5 minutes. We start this chapter. Okay, role of intermediaries in fundraising. Okay. Okay, so quickly let me know if I'm audible and visible in the chat box so I can start. Just write audible and visible in the chat box and I'll start. Audible and visible in the chat box and I start. Okay. So we'll be starting with your role of intermediary. Thank you so much, Divya. Okay. Aishwarya, great. Let's start. Hi. So we'll be starting with the lesson role of intermediaries in fundraising. In this chapter, typically we'll be learning three kinds of intermediaries. One is your investment advisor. You have to remember it is regulation number 2013. Your second is your merchant bankers, which is your regulation number 1992 of the year 1992. And third we'll be learning is portfolio managers, which is year 2020 to 2021. Okay. First, what are intermediaries? Intermediaries are SEBI registered, interlinks, helpers who help the company and the regulators. They bridge the gap between them. Okay, like your brokers, they help the companies and investors. They act like an interlink between the regulator and the other parties. Now, first we'll be seeing the first type of intermediary is investment advisors. Now, investment advisors regulation is given in your SEBI Investment Advisors Regulation 2013. So, who is an investment advisor? He is a person who gives advice, investment advice. Now, first when I say advice means it has to be for consideration. So, this is a person who gives advice for consideration. He is in the business of giving advice. Okay. And when I say advice means what? The scope of the advice. If this advice is not with respect to investment in anything but stock market. Okay. So if I give you investment for insurance, it will not come here. That's not an investment advice, that is regulated. Here we are saying investment advice means an advice relating to purchasing, selling certain investment products. Okay. And this advice could be given orally, could be written, etc. Now understand that when I say financial advice, imagine if I tell you you should start saving money and for saving money it is very good investment advice. This is not an investment advice. So any advice exclusively on non-security markets, something not related to security markets, okay, or falling under different regulator like your regulator of insurance, then it is not coming under these regulations. Okay, so what doesn't qualify as a advice? First of all, advice with respect to generic statements such as I feel that the market will go up or a market will go down, anything that you given on an interview, etc., which is available to public at large. Normally it is means when what we're talking about, you give an advice to one person for consideration, that is investment advisor. When I give an advice on YouTube generically, that is not investment advice, which is regulated, not considered to be investment advice. First of all, there has to be consideration. Second, it is not available to public, it should be to a specific person, that kind of things. And that it could be through any medium, newspaper, magazines, etc. Now these regulations, so as we saw, it has to be an advice given with respect to investment and it should be for consideration. Okay. So what is the law saying? What is the law saying? Law is saying that no person shall act as an investment advisor unless he gets a certificate from registration of registration. Nowadays we see so many people who are not investment advisors. These influencers, they come on Instagram, YouTube, start giving advices, they start charging on Telegram groups for giving calls or buy, sell, etc. That all is not allowed. Okay. And many times SEBI has taken action against them also. So now, as I told you, financial advice means related to stock market. So advices given which are coming, like for example, nowadays there's new kind of health insurance that they say, listen, you want a life insurance, we will give you some amount of this will go for your protection of your life, some amount will be invested in stock market. So that is exempted. Means if I give you an investment advice which is which I'm giving you, I'm an insurance agent, I am giving you investment advice of take a life insurance. Along with the life insurance, there is some amount that goes in stock market that is not covered under these regulations. So insurance agents, brokers which are registered with IRDA, okay, sometimes they include investment advice, okay, then it may be included in the IA regulations, okay. So they're saying normally it doesn't come, but if it is touching upon security market, then depending on the activities, if they're trying to expand the activities, then they will have to get registered, okay. Now registration requirement for a person acting in multiple capacities. Now a person who is an insurance agent, a pension agent, a mutual fund distributor, okay, and trying to expand, he may be registered and regulated under IA regulation. So here they are saying that depending from facts to facts, ideally you might not come, but from the facts of the case, you may be required to be registered under these regulations. Responsibility. Now if I am an investment advisor, I get registered, what is my duty? So first of all, my duty is I act as a fiduciary relationship, as a matter of trust. I should avoid all conflict of interest. Second, I should not take compensation from anyone other than my client. For example, if I'm taking money from a company, okay, because I'm telling all my clients to invest in that company, and because of that the company is paying me, then that is not an investment advice, because it seems like you are trying to allure people to do for your own gain. So an investment advisor shall not receive any consideration from any person other than the client for giving his advice, okay. If he is giving multiple kind of roles, then he should segregate and keep a arm's length relationship between all his activities. For example, if a person who is an investment advisor is also a mutual fund agent or mutual fund distributor, so he has to keep himself from conflict of interest. Arm's length price means he has to give everything at fair value, okay. So if I am a mutual fund distributor, I cannot give you investment advice so that my sales will be more. So they say it has to be genuine, bona fide, okay. Disclose any conflict of interest, tell them that I'm getting this benefit. Maintain confidentiality, okay. Restriction on personal transactions. So one, they are saying that imagine I give an advice to my client but I do something else. So I am not entering into a transaction which is contrary to the advice given by client. So that seems that you have done something wrong, not allowed. You have to do KYC, maintain a code of conduct, prohibition of self dealing. Okay, should not deal on your own account. Change in control is there, and compliance with all the certifications. Now redressal of client grievances. So in case if there is a dispute, so first it should be tried to be sorted through negotiation. If that doesn't work, then we should try arbitration. Then even ombudsman is there, and last is online complaint, which is court. So these are the 4 mechanisms for resolving the disputes. Initially, company should try to resolve, the party should try to resolve it as soon as possible. Okay. Then key parameters. Now what happens is they are saying that while giving investment advice, you have to do risk profiling, see what is the age of the person, what is the income level, what is the risk appetite, and accordingly give him investment advice. Give him suitable investment advice, okay, which he is looking to meet his investment goals, and all conflict of interest, etc. should be disclosed. So risk profiling is done on basis of his age, income details, his risk appetite, etc. his existing loan that he has. Now suitability means you have to give suitable options according to your risk appetite of the person and investment objectives. Okay. Now disclosure should be given, whichever is there. Now administration and supervision of your investment advisors. Now SEBI has created one body, okay, which is called as BSC. BSC has made a subsidiary whose job is to administer and supervise investment advisors. What is the full form? BASL, BSC Administration and Supervisory Limited. What does it do? It is a self-regulatory body whose job is to administer and supervise investment advisors. Exemption from registration. So the following persons do not require a registration under the IA regulations who are giving advice on incidental basis. Like for example, company secretaries keep giving advice to the BOD. So we are in the business of giving advice. Okay. So if it is coming through a role and law has said that this is the role of a person, chartered accountant will give you investment advice. Okay, given in good faith, then you do not require registration under your. So a person who is registered as a professional, whose job everybody knows is to give investment advice, they will be exempted from getting separate registration. Okay. So let's see. Any person who gives, and this is in the course of their work. Any person who gives general comments in good faith, does not specify any particular investment product or security, is exempted. Entities are providing incidental advice to the primary activity. So my primary activity could be a company secretary, could be a chartered accountant. So anything which is coming incidental. So your mutual fund, insurance agents, okay, distributors, etc. They all give advice. Pension advisor, insurance agent, advocates, ICAI, ICSI, actuaries, stockbrokers. So they all give advice which is incidental to their main job. So then they don't require. Okay. However, they never exempt. In the next line only they say that however, if you are giving proper advice, then you should be registered. Okay. What they say? Any person who provides investment advice exclusively to their clients out of India. So if a person is giving advice to Elon Musk, he does not need to be registered here. Now major developments and amendments in the investment advisor law, they are saying simply that you have to keep a segregation between an individual investment advisor shall not provide distribution service, mutual fund distributor. See, imagine I am in the business of giving advice, investment advice. Now if I become a distributor, means I am distributing some of my scripts. So I will be biased. That is why they say they don't do. And if a company is there, they can do, but they have to maintain separate accounts. Okay, if a group level is there, then they have to maintain separate account. They have to disclose conflict of interest. Okay, an individual investment advisor shall not give distribution services. Only then we know that he will be genuine and unbiased. Okay. Now even non-individual advisors, companies can do, but they have to maintain a segregation that this is distribution services and this department is different and this other department is this difference. Okay, now agreement is to be entered. Now it is mandatory to enter into a agreement with your client. So investment advisor will enter into an agreement with his client, will contain all the fees, etc. Now eligibility criteria for investment advisors. Now what is happening is, who can become investment advisors? You know, minimum net worth is 50 lakhs and 5 lakhs for individuals, 50 lakhs for, so 5 lakhs for individuals, 50 lakhs for non-individuals, and they should have at least 5 years of experience. So investment advisors net worth is 5 lakhs, 50 lakhs and experience of 5 years. Okay. And also one important line, they said that the maximum clients that you can serve. So individuals registered as investment advisors whose number of clients exceed 150 in total shall apply for registration with SEBI as a non-individual investment advisor. So individual who is giving services to more than 150 has to be registered as a non-individual investment advisor. Now my question to you is, SEBI doesn't regulate so many financial products. can investment advisors give advice on products which are not regulated by SEBI? For example, cryptocurrency. For example, digital gold. So we can't tell no to investment advisors, na? So we are just saying that you should maintain caution. SEBI has said that listen, you are giving, it is not regulated by me, but please maintain caution and refrain from giving advice in which you don't have knowledge. Liability has been provided in case if you breach. Summary has been given. Okay, now in the summary some points they have added. Okay, who can seek registration? Anyone, individual or non-individual. What is the role, what is the investment advice for consideration they are giving? Qualification, net worth I told 555. Cap, they put a cap on fees. Okay, 1.5 lakhs fixed or 2.5% of the assets under advice per client. So they said what is the upper cap? Fixed or this. Okay, this is the cap. So I cannot exceed these limits. So I cannot charge more than 1.5 lakhs per client or more than 2.5% of the total assets that I am dealing. Agreement is compulsory. Okay, investor grievances I told you can be done. Clients, if you are more than 150, then you have to get registered as a non-individual. Free trials are not allowed. That take 2 advices, 3 advices for free. Free trial is not allowed. It has to be for consideration. Okay. And receiving fees allowed only up till 2 quarters. So if I am receiving fees, then it will be up till 2 quarters. If I am taking advance money. So advance money cannot be for full year. It can be maximum for 2 quarters. Okay. And not allowed only accept payment across DD or checks or through a banking channel. Cannot accept in cash. Complaints will come on SEBI's code portal, etc. Now the second type of intermediary is called as your merchant bankers. Now remember, merchant bankers we already know, and I don't feel that they can ask you much on or will ask you about merchant banking because we already know everything. So a merchant banker is called as an issue manager. They manage the issue whenever you want to get listed. They give advisory services. They might give you international advice that how you can get listed, raise money from abroad. They also can act as a underwriter, etc. Okay. Now what is important? Now net worth. What is the net worth of SEBI merchant banking regulations? They have said 1992 that the net worth shall be not less than 5 crore rupees. So note it down. 219 merchant bankers are registered with SEBI as on date. Application. Okay. Now for the application, there are different categories of merchant banker. Market is important. You start from the lowest category. Okay. The lowest category is category number 4. So merchant banker has 4 categories. First is if I'm an investment advisor or consultant, I'm in category 4. Now just add one more thing. If you add underwriter also, so then you come in category 3. One feature you have to keep adding. Above I can add one more feature. Portfolio manager also. So then I become in category 2, and category 1 can do any services, all of them, and any other service also. Again, lowest level of category of merchant banker is 4. He can give only advice and consultation. Third category can give advice, consultation and underwriting. Category 2 can give advice, consultation, underwriting and portfolio manager. And first one can give any activity under issue management. Okay. Now, net worth is 5 crores. We had seen has to be a body corporate. Whenever there is a change in control in the merchant banker, you have to obtain approval of SEBI. Role of merchant banker in IPO. Okay, so they can become obviously issue management. They have, in case of book building issue, they will be the book running lead manager. Means they will maintain the books and look at the bidding process. And they give a due diligence certificate. Responsibilities of merchant banking, everything you can see: due diligence, pre-marketing. They can give domestic advice or advice about international listing, etc. Okay, or relating to everything. Now the third kind of intermediary is called as your portfolio managers. Now what are portfolio managers? So portfolio manager is a person who will manage your portfolio. Okay, so high net worth individuals who are there, they have a varied amount of portfolio. In stocks also it is diversified, real estate also diversified, they have in multiple places they invest. Now it is mandatory for them to have an agreement. So client and portfolio manager have to have mandatory written agreement. Okay, now there are two kinds of portfolio managers who are there. One is who can operate independently without the consent. It is called as discretionary portfolio. They have complete discretion to deal and buy anywhere. So for example, if I appoint you as my portfolio manager, so you will say that he is a smart guy, he will invest anywhere. With my fund, you will keep buying without my consent, because I give you consent in the beginning only. Deal how you want, you are an expert in this field. The other one is for a person who wants control. Investor is saying no, wherever you want to invest, take my consent and go. So this is non-discretionary. The portfolio manager does not have the discretion to buy without client's consent. So he cannot operate independently. No right to operate independently. Here you can operate independently. Okay. So when it is discretionary, now understand one thing, that SEBI's job is to protect investors. So what they say, that if it is discretionary, the person can go and buy anywhere. So if discretionary means what? The portfolio manager has the discretion to purchase without the consent of the client. So your law has said that listen, you will invest only in listed companies, because you are going and buying anyway, so buy in listed companies only. Don't go and invest in a private company. Common sense, to protect the investors. For non-discretionary, okay, for non-discretionary, let's see what is the threshold. For non-discretionary, in unlisted securities, you can invest only up till 25%. See, if you're appointing a portfolio manager, mostly we feel he'll invest in all these listed securities. Max, they are saying, unlisted securities, you can only deal up till 25%. Now, breach, if you cross the 25%, active, it is not allowed. You cannot go ahead and buy. You have to take measures to get these extra shares. So if a company is there, they have already issued bonus shares. So that is a passive breach. That is allowed. So that means maximum portfolio manager can invest how much in unlisted with consent. Non-discretionary, he doesn't have the option, he has to take my consent. It is maximum 25%. In if this 25% can be exceeded only if it is a passive, like you got bonus shares. Any other thing wherein a right issue is there and I have applied to get more, that is not allowed. Okay, let's see. So this is what they will give you, that portfolio managers, they manage the portfolio on behalf of the client. It could be of securities, goods, anything. Okay. Discretionary means the portfolio manager has the discretion to purchase without the consent of the client. Any degree of discretion is given. Okay. In discretionary, the portfolio manager independently manages the funds of the security. Under non-discretionary means you don't have the discretion, the portfolio manager manages the funds in accordance with the client's directions. Now for this they have these regulations. 2020, okay, 2020 minimum net worth is 5 crores. Fees can be, now how much will the portfolio manager earn? So he can take either of, up to them, fixed, performance based, or combination of both. Investment rules, okay, which I told you about, that 25% not allowed. So first they have to enter into an investment agreement. Okay, it must be there. No transaction with related parties, or only after consent of the client. Okay, so portfolio manager may make an investment with related parties only after obtaining prior consent of the client. Discretionary, you can invest only in listed. In non-discretionary, may invest up to 25% in unlisted securities Okay, and unlisted securities include your AIF and all those things that is allowed, which are not listed on any recognized stock exchange. A portfolio manager shall ensure that any existing client of non-discretionary portfolio management services which may result in the breach. So portfolio shall ensure that existing client of non-discretionary has already invested in the unlisted security does not subscribe. You have to ensure that he does not subscribe to right issue, because it will be an active breach. Okay. So any breach due to the investor's action subsequent to this, which breaches a 25%, is called as non-compliance. Passive breach is allowed, which is bonus shares, etc. Okay. Now minimum investment requirement. Portfolio manager is required to accept a minimum of 50 lakh rupees or a minimum worth of 50 lakh securities of 50 lakhs from the client. Now we are talking of portfolio managers. They are managing high-end portfolios. So that means at least you have to give 50 lakh rupees to them or 50 lakh rupees worth shares to them. Okay. They have to prepare their report and then they have to share. Okay. General responsibilities: maintain the code of conduct, fiduciary relationship, maintain a proper, this is same. Role of company secretary. So when you see that for listed companies, we are appointed as a particular compliance officer. So that is, we take a key role to connect with all the intermediaries. Okay, whether it be contacting with merchant bankers, auditors, lawyers, etc. Okay, so we coordinate with all the three intermediaries: investment advisors, merchant bankers, and portfolio managers. With this, we have completed the entire chapter. Thank you. Clear, guys? Till here? Yes or no? Till here it is clear? Yes or no in the chat box? Till here it is clear? Yes or no? Everyone in the chat box? Yeah, doing it. Relax, relax. This is which chapter? Okay. Till now everything clear? Yes or no? This, or looking at which chapter I can complete. Okay. Okay, Gautami, great. So we'll start in 5 minutes. Okay, so am I audible and visible to you all? Okay, in the chat box quickly so I can start and complete it. Okay. Am I audible and visible, everyone? So we will be doing this chapter. Okay, great. Thank you. Let's begin. Hi. So we'll be starting with raising of funds, private funding. Now, when we see what do you mean by private and public funding? So public funding is when I go to the public and I raise funds. So for that we have a ICDR regulation where I make a IPO, FPO and raise money from public. When I plan to not go to public and try to look for other methods of raising funds, like maybe a venture capital, okay, or these private equity investors. So then for that the regulation is SEBI AIF regulations 2012. So what is AIF regulations 2012? So today, instead of going to bank to take a loan, or when the bank doesn't give me a loan, I look for alternative ways to raise funds. Okay, I look for alternative ways to raise funds. Let's see. Okay, like we have your venture capital, they used to call it, and now that regulation has now been called as AIF regulations 2002. Now when we see the regulations, we directly come to the definition. So what is the alternative investment funds? That if any company other than the traditional methods they are looking to raise money, so then they will go to AIF. AIF operate with the concept of higher the risk, higher the return. So maybe people like Ambani, etc., HNIs prefer to invest in AIF, who will invest in these early stage companies, these risky ventures with the objective of getting extremely high returns. Now remember, what is an accredited invest agency? Just remember that accredited agency is a subsidiary of a recognized stock exchange, okay, like your NSC Academy, etc. And what do? They recognize your high net worth individuals. Okay, so what is the accreditation? So they will give certification to certain big investors. So we'll see who are these accredited investors. So accredited investors are extremely rich investors. So in the investment category also we can have some basic people investing and then Mukesh Ambani investing. So a accredited investor is a Mukesh Ambani type. So they have given you thresholds. So first of all, he because of his financial capacity, he is recognized as a accredited, a huge or a significant investor. And this certification is given by the agency above, the subsidiary of the stock exchange. Okay, they recognize. Now who they will give this certification to? So first of all, accreditation investors will certification will be given by these agencies if they are meeting any of the following criteria. Okay, so basically they will see, this is the criteria that they will look at. So who is an accredited investor? Accredited investor is a person who has got a certification from accredited agency and they have an annual income of at least 2 crores, or they have a net worth of 7.5 crores, or a combination. Annual income is of 1 crore or minimum net worth is of 5 crores. So these thresholds they have given you. Very simple. Accredited investor means either you have very high income, very high net worth, or a combination of both. So either I have 2 crores or more, or I have net worth of 7.5 crores, and net worth out of that 50%, minimum 50% in financial assets. So it shouldn't just be property, it should be financial assets like shares, etc. So then you become an accredited investor. The following are deemed to be accredited investors, means government or certain sovereign funds, etc. They are deemed to be big sophisticated investors by default, QIBs, etc. Okay, now we see the definition of AIF. We saw these AIF regulation, but sir, what do you mean by AIF regulation? So we can say this becomes the most important. This becomes the most important. Why? Because we are seeing the definition of AIF. So AIF is a fund incorporated in India. Maybe it could be incorporated as a trust, LLP, company, body corporate. So a fund incorporated in India could be any structure, is privately pooled. So we are doing the chapter only private issue, means here you cannot raise money through public. We are raising it through privately placed funds, okay, and they are not under any other regulation. They're not mutual fund, not CIF, not any other regulation. Then obviously they are AIF regulations. And the following shall not be, they are AIF, okay, because they are not considered under any, they are not regulated under any other regulation, any other SEBI law, plus they are privately pooled. Now, however, the following are not to be considered as AIF. So they have given you these following, like a family trust, ESOP, employee funds, etc. They are not AIF. So AIF, what are AIF exactly? So how we have mutual funds? So they pool in the money. They pool in money from everyone, unit holders. Here they will pool in money on private basis, privately placed. Okay, from HNIs, high net worth individuals, accredited investors who have this income, net worth, etc. And the money will come here, and from here the money will then be invested into high risk projects. Why high risk? Because of hope of getting high return. Now there are three categories that are there: category 1, 2 and 3, where they can invest depending on which type of investment they are doing. So we'll see when we come to this three categories of AIF. Okay. Now from the name itself you can see a fund. Debt fund will be, they are investing in debentures. Hedge funds, they will be investing in complex trading strategies. Infrastructure fund invest in debt of infrastructure projects. Okay. Now investable funds means the total funds minus the expenses is the money that I have to invest. That's called as investable funds. Okay. Large, now this is the, among accredited investor, we are calling one more person is really big. So large value funds for accredited investors means a AIF. Okay, in which each investor is an accredited investor and invests not less than 70 crores. So what is happening here? Large value fund means everyone is only accredited investors and they are investing not less than 70 crores. Okay. All these other things will come, social impact, etc. Just from the name itself we can understand. Social welfare, they are looking, so any fund which is trying to promote any, so what do you see, what is a social impact fund? Means from the name itself, the fund works towards social welfare, social ventures. Now what does social ventures mean? Maybe for some social purpose, social problem, okay, any of this, microfinance, section 8 company, etc. which is there. Now let's see the most important part of the chapter is the categories of AIF. Extremely important, this is the full chapter only. So AIF can be divided into three categories. Category 1, invest in good for the economy, okay, socially, economically desirable, like your startup ventures or maybe your social impact funds. They are doing social ventures. They are investing in businesses which work towards benefit of society, towards infrastructure. Special situation funds, it will come later on, that they invest in all these SIC companies, okay, which are under IBC code. So all these are good. Then because they are investing for something which is socially and economically desirable, then they receive a lot of government concessions. Now category 2 is very simple, which is not falling under category 1 or 3. So it's a default category that which is not in 1 and 3 will come here. Okay. And they do not undertake to take loan to me except for day-to-day operations. And included funds are private equity funds and debt funds. Okay. So they don't get any specific concession. So first thing is not under category 1 or 3 come here. If you see which are the ones, private equity or debt funds will be there. Because category 3 is talking about derivative transactions. So category 3 are those categories which invest in complex trading strategies. They may use leverage, means they may take debt, Okay, and they are hedge funds, etc., which come. We saw hedge funds above in the definition. They invest in complex trading strategies. So if I go to see three categories we have. Okay, three categories. Sir, what is three categories? You can take a screenshot. Category 3, invest in complex trading strategies such as hedge funds. Category 1, they invest in early stage companies. One, because very good, socially and economically desirable. Social impact funds, they invest in social ventures, venture funds, etc. Only category 1 gets tax benefits, and category 2, which doesn't come anywhere, like your private equity doesn't come anywhere, or debt fund doesn't come anywhere, or fund of fund doesn't come anywhere. So this you can remember. Okay, so your three categories are done. Now registration of AIF. Now today if I tell you go and register in AIF, where will you go? Okay, so all AIF have to be registered in any one of the three categories. Will be registered in any one of the three categories. Okay, they cannot act except they get a certificate from SEBI. So they have to get a certificate from this. And just like mutual fund can issue multiple schemes, obviously AIF can also issue multiple schemes. Okay. Now, can a AIF change its category after registration? So the answer is yes. Only AIFs who have not made any investment under the category in which they are registered. So can I say that they have not invested anywhere? So then they are allowed to apply for change in category. So now where do you register and how do you register? So SEBI has introduced a online filing system in which you can make an application. On that you can make reporting and filings also. What is the name of that portal? sipportal.gov.in. Okay, so you can take the name. All SEBI registered have to file compliance report through this portal only. Okay. Next, investment strategy. Okay, so where you invest, etc. So when, just like a mutual fund will tell you where they are planning to invest, their investment strategy, even AIF will tell you, and that document by which they will tell you is called as placement memorandum. Okay, so placement memorandum is like a prospectus here. Prospectus for public, this is privately placed, that's why it's called as placement memorandum. In case AIF decides to alter the strategy, it will require consent of 2/3 of the unit holders. Okay, now we are seeing the second part. Okay, now investment in AIF. Now I'll tell you something that you have to learn and write it down. Okay, so investment in AIF. So AIF in all categories, whether in this, only by way of issue of units. So obviously they can raise money from anyone can invest here, but only by way of issue of units and privately placed. Corpus requirements, how much they have to have minimum? So at least 20 crore rupees. So corpus means when they are raising money, minimum they should have 20 crores, and each person who's coming will have to give at least 1 crore. I want you to remember this, later it will help you. So what you'll remember is AIF minimum corpus is 20 crores. And minimum person investing in AIF has to be minimum 1 crore. Okay, that is it. Now only exception is there for employees who can make 25 lakh rupees up till 25 lakh rupees. For employees we can say not 1 crore, you make 25 lakhs, it is fine. Okay. Then comes the placement memorandum will disclose the investment strategy, and the maximum number of investors that you can have is 1000. Common sense, just see now one person is giving 1 crore minimum. So like that, even if I tell you have minimum 1000 means how much money they will have. Okay, AIF units cannot allow to be public issue, not allowed. They will be on they are only permitted. Private issue is only allowed. The listing after issue can be done. So private sale is there, privately placed, and then after, so when the AIF issues to the investor, now investor wants to sell his units, so for this listing is allowed. For investor to investor, secondary market listing is permitted. Okay, remember that. Now social impact funds. Now we are done. Sir, what is social impact? I told you they invest in social ventures. For them, they come under which category? So every time you start, you will write that it is a category 1 AIF. So beneficial, na? So a social impact fund issue social units. Now they have a corpus of 5 crore. Now all these benefits will start coming moment you are in category 1. Okay, that their minimum corpus is at not 20 crores, 5 crores. Okay, even non-profit companies can come, and minimum value of investment normally how we saw is 1 crore for your category 1 as relaxation. 2 lakh rupees also it can be given. Okay, provisions for open-ended scheme falling below 20 crores. So AIF shall intimate SEBI. So this is in case if this falls below 20 crores, you have to bring it back within 3 months above again. Okay. So placement memorandum is basically your information memorandum. All the details of a prospectus will be there. Okay, schemes are there. So multiple schemes can be done. So private placement will be rotated. Okay, 30 days prior to the launch, you have to get approval of SEBI, get the comments, incorporate the comments, and then launch the scheme. Can a AIF launch scheme? Obviously, they will launch multiple schemes. Okay. Modalities for placement through a modality means provision for placement through a merchant banker. Now what happens is merchant banker helps you source funds also. So even here you can appoint a merchant banker to help you in this entire process, issue management process. Though it is privately placed, they will do due diligence. It will be given to them. They will get the comments. They will study the placement memorandum. All the changes will be done. And merchant banker should be independent, should not be connected with the sponsor, manager or trustee. Now tenure of AIF. Tenure of AIF. That minimum tenure is 3 years. So category 1 and 2 is 3 years. It will be close-ended. Okay, category 1 and 2 will be close-ended. Close-ended means what? We will issue it privately and then it will get listed so it can be traded. Okay, extension can be given for 2 years. So life of a AIF could be minimum 3 years and you can extend it for a further period of 2 years. Category 3. Now category 3 is a extremely risky, most risky category. So for them it could be open-ended or close-ended. Okay. Second, extension of tenure is also given with the approval of 2/3. Large value funds. Remember we said large value funds who invest huge amounts. So they are accredited investors who are investing a certain amount. They can come here. Listing. Now close-ended will get listed for investor to liquidate his shares. Okay. Minimum tradable lot, as I told you, investment amount has to be minimum 1 crore. So minimum tradable lot is also 1 crore. Okay. General investment conditions that let's see, general, not important. Then you can see this conditions for category 1 AIF. Now very simple. See, category 1, case 1, it could be anyone. Okay. So eligible investments, conditions for category 1 AIF. Category 1 invest shall invest in. Now where they can invest? Investee companies, venture capitals, special purpose, LLP, all these companies. Okay. You can also invest in units of category 1 and 2. Means we are talking of conditions for category 1 AIF where all they can invest. So category 1 can invest in. So obviously they will invest in startups, all those initial cases. Okay. Is hedging allowed? So hedging is basically a manner of minimizing the risk. Definitely it may hedge their positions if they want. They may minimize the risk. Borrowing and leverage restrictions. So it is okay, 3410 that category 1 shall not borrow except for temporary purpose for a period not exceeding 30 days, not more than 4 such occasion, and for an amount not exceeding 10% of the investable funds. So temporary, can they borrow funds? They can not, except for temporary, that is 30 days, maximum 4 times they can do, and maximum they can go till 10%. That's it. Okay. See, now we see in case AIF is venture capital fund, additional conditions will apply. So all those will be applicable only. Okay, additional consideration means specific it is, so then they will have to go in that specific category. For example, if it is a venture capital fund, they will invest in 75% in venture capital, so unlisted entities or listed SMEs. Then we see again, if it is SME fund, then 75% is there, it will go in SME entities only. And market making can be there, and insider trading should be prevented. SME funds are exempt from insider trading laws. Let's see. Now again, if it is so every time the rules are the same, that's 75%. So if it is a social impact fund, 75% of the investable funds will be in social ventures or social enterprises. And normally they issue zero coupon, zero principal bond, the instrument. If it is infrastructure funds, 75% will be invested in infrastructure projects or its SPV, etc. Okay, hedging, all these common points are there, you all can read it. Let's see what else is important. Then we come to the third important thing, okay, which is about angel funds. Very, very, very important. Okay, the whole thing is important. So angel funds are those funds which are category 1 AIF. So category 1 AIF is an angel fund. They invest in early stage companies. Those who are investing are called as angel investors, and that fund which is accepting this money is called as angel fund. So what it is, a category 1 AIF, which is an angel fund. So they invest only in early stage new companies. Okay, so a angel investor will invest in the angel fund, which will then invest in these new entities. So now they'll tell you, a angel fund means any person who invests in so angel investor is a person who invests in angel fund and fulfills any one of the conditions, is an individual, okay, and who invests in early stage companies or as a serial entrepreneur, and is a senior management professional with at least 10 years of experience. So we are talking about an angel investor investing in startup. They have a net assets of minimum 2 crores. This investment conditions you can remember for them, and what benefit they have. Okay, that investment in angel fund, they can raise money only, angel fund can raise only through angel investors. The corpus will be at least 5 crores. Normally this AIF have 20 crores minimum corpus, and the minimum amount they can take from one person is 1 crore. Here they can take minimum amount is 25 lakhs, and no scheme of AIF shall have more than 200 angel investors, and they might launch multiple schemes also. Now, investment by angel funds. Now they are telling you that they will invest where? So in investee companies. Okay, so investee companies means a company which doesn't have any promoted by any big group which is having a turnover of 300 crores. So they want all small companies. It shouldn't be that you are a subsidiary of a company which is having turnover of 300 crores. So invest in early stage companies is what they want. Okay, investment limit. So this entire thing I wanted to market is important, that investment by angel funds shall not be less than 25 lakhs and shall not exceed 10 crores. The investment amount is 25 lakhs to 1 crore. Lock-in period will be for 1 year. They cannot invest in their own friends, and they cannot invest a lot of money in one company only. So to ensure diversification, maximum 25% in one entity, and they can also invest in outside entities. Angel funds will not be listed on any recognized stock exchange. Okay, they have to maintain records for a period of 5 years. Now, very important, special situation fund. Okay, very important. The special situation fund invest in special situation assets. What are special situation assets? Which are going under IBC for restructuring, etc. Okay, so revival is trying to be done of that company. Any stressed company, any stressed loan that is there by RBI or any IBC. So a special situation fund is a category 1 AIF that invest in special situation assets, and they will invest in all these companies. They might act as a resolution applicant under IBC. Means a special situation fund has money, they will invest also in SIG companies. So they will act as a resolution applicant as an investor to revive a SIG company. That's allowed. Okay. So special situation assets are stressed loans, security receipts of ARC, your securities of investment investee companies which is under any CIRP process, etc. Okay, they may apply for registration. Okay, they cannot invest in associates. They will invest only in special situation assets and act as a resolution applicant under IBC code. Now, compliance test report. Now, what is a compliance test report? Here, it is prepared by the manager of AIF. It will be submitted to the sponsor and the trustee along with SEBI, okay, to tell them that whether they have complied with the laws or no. Compliance with the, so it is the manager will prepare a compliance test report at the end of the financial year telling that whether he has complied with the AIF regulations or no. Okay. Prudential norms, just read, not that important. Seed funding, private equity, these are all generic stuff, okay, which is not really law. The general meaning of everything which you can write. Okay, not important. Okay, with this we have completed all the important parts of the chapter. I've given you the markings also, you can read on those as well. Okay, so that is it. We have completed the entire chapter. Thank you. Okay, done. Clear till here everything. I have given you the markings, you can read all of those, and that is it for now. Rest you can read and study from your dream batch. I mean, dream batch I've covered, that is the full regular lectures that I've covered everything in depth. Okay, that you can see. This is like in a day's time trying to complete multiple chapters, which normally takes one day. One chapter takes multiple days. So that is it, guys. I will see you all in the next session. Do like the video and share with your friends. In the comment section also, let me know how did it help you. Take care, guys. Bye. Detailed lectures you can get it from the dream batch or our regular lectures where we cover everything. Thank you and good night, everyone. Good night.